The start of cash equity trading on Francine Lacqua in London with Tom McKenzie.
And here are your top stories. Asia stocks and US futures full as investors wait for key inflation data for clues on the Fed's rate path. And the nominee to become the next Bank of Japan governor says policy normalization will need to be considered if the outlook for prices improves.
And we are live in Kyiv, 12 months since Russian troops rolled across the border here into Ukraine. We will talk about the path out over the next year and what has happened already this year.
We, of course, look at Kyiv. We look at the 12 months since the invasion, day per day. We look at the energy complex. We also need to look at some data out of the U.S. We have PCE, and on the back of that, futures are pretty much flat.
Yeah, PCE, as you say, absolutely key. We know how important it is for Jay Powell. We'll check in on these markets right now. Just give them a few seconds to register the data coming through then. The PCE number is expected to come through at around 4.3% year on year. Of course, the importance in terms of a gauge on the strength of the consumer prices, the labour market, of course, all feeding in to that PCE indicator. And again, Jay Powell, we know the importance for that in terms of the guidance and where the Fed goes from here. Markets pricing in potentially a terminal rate of around 5.3% by July of this year. The FTSE 100 gaining 0.2%. We had the consumer data coming out, at least a consumer survey, consumer sentiment survey out of the UK showing that rebounding at the sharpest pace in about 2 years. So the sentiment seems to be improving here in the UK, even as prices remain relatively high. Over in Asia, it's worth noting, we'll touch on this, the tech sector, particularly Chinese companies listed in Hong Kong. The Spanish IBEX gained 0.3%, the FTSE 100 currently up 12 points. Let's switch it on then and see how things have played out in the Asian session with the focus on Chinese tech companies getting a battering today. HS Tech currently trading at 4,000, a move lower by 3.3%. Concerns around the earnings coming through from the likes of NetEase, the gaming company, and Alibaba as well. The HS Tech Index now down around 16% from its peak in January. Future stateside pointing to the losses of 0.2%, as well as that PCE indicator. We do have a number of Fed speakers as well, so it could well be a volatile trading session. The US 2-year trading at 4.68, just a move of 1 basis point. Brent at $83 a barrel. That is a gain of 1.2%. Fran?
Yeah, I'm excited about PCE. I mean, of course, this is the Fed's preferred price gauge. This is expected to show an acceleration amid robust income and spending growth. Now, on the back of that, or ahead of that, I should say, Tom, I keep on misspeaking on that point. Of course, a lot of focus is on Japanese markets. Ahead of that, if you look at the groups that are moving the most, so first of all, they're not a huge range, so they're gaining by about 0.2%, but actually out of 20 groups, so 19 are on the up. It's only healthcare that's seeing a little bit of pressure overall. Let's also get over to our Bloomberg MLive managing editor. He's Mark Cudmore. And Mark, good morning. You're looking at commodities.
Good morning, Fran. Yes, I am very, very worried by the core PC data that's due out of the US later on. I think it is very much asymmetrically skewed for an upside beat, and I think that'll upset the market. We'll see yields close the week higher, and I think it'll really upset stocks Friday. But amidst that gloomy prognosis, there is one very clear disinflationary pressure, and that is from the commodities complex, and it is getting stronger and stronger all the time. The Bloomberg Commodities Spot Index is trading at the lowest level in more than a year. And you can see this is the trend over the last 5 years. It kind of soared post the Russia invasion of Ukraine up until last summer, a peak of around June, and it's been falling steadily ever since then. In fact, this below chart shows the year-on-year change. And you can see that after the this was where the pandemic was, and a year later, you can see the liquidity-fueled gains were just really, really kind of extraordinary. And again, after the invasion, we saw those kind of of extraordinary gains. Finally, about a month ago, 4 or 5 weeks ago, we finally turned negative year on year. And now commodity prices are, based on their Bloomberg Commodity Spot Index, that aggregate index, are 10% lower than they were a year ago. Now, unless they rebound very, very violently, these year-on-year declines will be massive by the time we get to that April-June period of the year. So this is a major disinflationary impulse, even though I am worried about the persistence of inflation, and in the short term, very worried about the data out of the US today.
Okay, Bloomberg MLive Managing Editor Mark Cudmore setting us up really nicely for the next conversation, where we're going to dig in and get some insights on the trajectory of inflation out of the US. Yes, markets awaiting the release, of course, of the latest PCE deflator, the Fed's favoured inflation gauge, as we've mentioned, for any clues on the central bank's rate hike campaign. It is expected to show the index that the acceleration amid robust US income and spending growth. The number expected is 4.3% year on year. We're joined now by Christian Keller, Head of Economics Research at Barclays. Christian, good morning. Thank you for joining us. To Mark's point, tying in the inflation part of this inflation picture, arguably the disinflation around supply chains and around energy, that's the easy bit, and we've seen progress on that. Are you starting to see any signs that the services component is starting to move in the right direction?
We have and we have not, in the sense that, there are some, for example, private surveys that tell us that rents should be coming down in the future. But there are also some signs, in particular with regard to the labor market, that service inflation could remain quite strong. It's just this labor market, if you look at claims, for example, this week, has all the indications of remaining quite hot and quite tight. And, we also have some indications in the goods deflation, that is coming to an end. We thought that goods would be a deflationary element, but if you look at recent indicators in, for example, used cars or so, we see that actually goods inflation has probably discontinued to deflate. And that is, of course, another element that is important if you look at the path of inflation.
So, Christian, what does that mean? First of all, do you have a favorite indicator? I mean, I know the PCE is like the Fed's. We just need to really understand what inflation will do from now here. I don't know if there's something that gives you a trajectory for the next 6 months.
I think, there's core PCE, which we all look at, but there's super core, where we start looking at services. We take out rental inflation, trying to look at the elements of services that are most influenced by the labor market. We look at all of those. But we are less focused, for example, on those elements like commodity prices that have been mentioned. We very much focus on the labor market. We think that is really key also for the Fed.
And the data so far on the labour market, as you point to, with the jobs claims out yesterday, suggesting that resilience remains. This is a very, very strong labour market still. Every single data point seems to suggest that. What level of rates are you and the team looking at now from the Fed to get inflation down to that 2%, to break that labour market?
Yeah, we have upgraded our rates call to 5.5% for the upper end of the Fed funds rate, 5.5 in June. And we still see one cut by the end of the year. But, the market has obviously adjusted a lot for this. If you look at now, the market still has a rate over 5% by the end of the year. You go just a few weeks back and it was like 4.5 or so. I think this is quite important. And it seems equity markets have not reacted as much as rates markets have. And I think this is the interesting issue from now on. Will equity markets basically remain resilient to the data, or will they do what rates markets have already done?
I mean, I have to say the modeling just looks so weird. I know it's not CFA level 5 what I'm saying, but if you just look at the strength of the economy, if you look at the labor market, it makes little sense with how hikes have been increased in such a short amount of space. How do you look at the lagging effect? Like, could we have a big wallop mid-year?
Yeah, frankly, I think this is the biggest conundrum for us economists, and we've been discussing it internally a lot. We
I'm glad it's not only me, Christian.
Yeah, no, it is. We had so many hikes in such a short period, and our models do tell us, it's a lag of, at least 6 months, 8 months, 12 until you see the peak. But so far, we've seen actually relatively little, and there is debates whether, the role of financial markets should have actually accelerated the monetary transmission mechanism, but it doesn't seem to have done so. So it is something that I believe, could become a surprise later on this year, that we see the lagging effects. And suddenly, in particular in Europe, I think we could see the effects of that on the market and on the economy in particular.
The other big news item today, of course, is Ueda, Kazuo Ueda, the nominee for the BOJ, giving some testimony over in Japan, sticking to the script, it seems, but suggesting that if you start to see evidence moving to that 2% target, then maybe you can start to end the easy policy, but saying it's appropriate for now. Your concerns, are you concerned about the flows that we could be seeing back to Japan if we start to see an unwind of yield curve control, and what that means in this high yield environment?
Yeah, I mean, we're there today, and we're Japanese inflation data.
Right.
We should be starting talking about this more than we used to in the past. Ueda was unsurprisingly didn't give strong indications he wasn't going to do this. But yes, you know, if Japan moves off the YCC control, you know, and probably 10-year yields would overshoot, there are indications that once they were at 1% or so, a lot of the local investors say, you know, they would go back into local bonds. And, you know, they have been flowing out into the US, but also in parts of the Euro area market, French government bonds, etc. They would not continue to do this in that respect and possibly also draw back. So, yeah, that is something I think markets are looking out for.
All right, Christian, thank you so much. Christian Keller, Head of Economics Research at Barclays. Now let's get back to Oliver Crook in Ukraine. Ollie.
That's right, Francine. A year into the war, a year since Russian tanks rolled across the border into Ukraine. How is Kyiv holding up? And not only just here in Ukraine, but the massive impact this has had across the planet. We see job cuts in Germany today, directly related to energy costs. All that and much more coming up. This is Bloomberg.
Coming out of World War II into the 1950s, you mentioned that the Fed had imposed yield curve control, basically to finance the wartime deficit. They were trying to move off of that. These are all sort of familiar themes to anyone in 2022, but why was that difficult for them?
Well, so let's get a sense of scale, right? Mm-hmm. So in 1941, there's about $40 billion worth of treasuries outstanding. In 1945, there's about $240 billion worth of treasuries outstanding. So that's about double the pre-war GDP. If you scale that to 2019 and say, okay, COVID expenditures on the scale of World War II, that's about $40 trillion. And the question is, who's going to buy it? Yeah. And
so what we're dealing with is kind of nothing. We got it.
In that context. And so that's where I guess the analogy breaks down. But it's a very difficult problem, which is who's going to buy the equivalent of $40 trillion today in debt?
The top names at the Fed are on Bloomberg.
Inflation's normalizing, but it's coming down slowly. I just think there's going to be a lot more inertia, a lot more persistence to inflation than maybe we'd all want. I'm hearing people still out there pushing price and trying to test where the levels of inelasticity really are. As the meetings go on this year, we'll see what happens. If inflation settles, maybe we don't go quite as far. But if inflation persists, maybe we'll have to do more.
Nobody covers the Fed like Bloomberg, your global business authority. Information you want, analysis you trust, everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg.
The war will end when Russia realizes it was a mistake. And when is that? It is very much related to the army doing the way they are. So if we provide Ukraine the military help, the signal to the army could be also that you can't really win this.
Estonia's Prime Minister Kaja Kallas there speaking to Bloomberg. Now, today, of course, marks 1 year since Russia's invasion of Ukraine and its failed attempt to capture Kyiv. Ukrainian President Volodymyr Zelensky tweeted that his country will see victory this year. Joining us from Kyiv is Bloomberg's Oliver Crook. Ollie, good morning. A year into the invasion then, what is the situation on the ground? What is the atmosphere there?
The atmosphere in Kiev is defiant. A year into this, dawn a year ago, was this entire city, this entire nation was awoken by the sound of explosion, of aircraft flying overhead. And then we saw those images of the military column rolling across the border into Ukraine, shocking everybody. It was a shock to see those images, but a shock to see war in Europe. And you see this massive convoy heading to Ukraine. And frankly, the shock for many that Kiev is still standing today. You take the train over from Warsaw into Kiev, as we have just done. You cross through Bucha. That is the last thing you do before you enter Kiev. It is right on the outskirts. You realize how close the Russian military was to the seat of government here in Ukraine. But a year later, it still stands. Zelensky is still president, still fighting, and the cost has been immense. Hundreds of thousands of wounded and killed on both sides. 8 million people displaced. You see on the train mostly women coming back to Ukraine because the men are not allowed to leave. So a year into this, you have the Ukrainians defiant. And if there is everyone you speak to here, one thing is very clear. There is absolutely no backing down.
There are quite moving pictures, Ollie, that we're looking at right now with President Zelensky speaking to troops. It could be Kyiv, but also they're keeping it very low-key in terms of location, of course, for security reasons. What's the path forward? How do we achieve peace?
So I think that everyone is girding the Ukrainians, the Americans, the Russians for potentially a very protracted conflict. You have a very long haul, and the Ukrainians are aware they cannot do it alone. $2 extra billion potentially coming from the United States today. That adds to $27.5 billion in military aid the United States has already given. And Biden in Kiev earlier this week, an immense adrenaline shock, saying that we will be here as long as it takes to see this through. But the question is, domestically, in the United States, will there be support for this war for years and years to come? And Zelensky very much aware that he needs to have that support. He was speaking at Munich Security Conference a week ago, doing what he does best, garnering support for Ukraine, keeping it front of attention, and we'll hear from him again later today.
Yeah, bolstering the military, of course, and economic support from the US, and that is the key potential tension point going forward, particularly within the Republican Party. Meanwhile, Ollie, in China, officials putting forward a 12-point proposal, a 12-point plan to end the war, as they would hope. Can Beijing's call really move the dial on this, their call for a ceasefire?
Yeah, it's hard to interpret China's sort of position throughout this entire conflict, particularly now coming forward with a sort of peace proposal. As you mentioned, 12 points. You look at it, there's a ceasefire, it's calling for peace talks. It's also calling for the elimination of unilateral sanctions, i.e. sanctions against Russia. It says nothing about territorial integrity within Ukraine, so there's not a lot in that for the Ukrainians. One thing we might take away from it, is if we step back, is it potentially an encouraging sign to see that China is staking itself as more as a sort of neutral arbiter, rather than, as earlier in this week, the United States concerning that China would actually furnish lethal support to Russia in this conflict.
Ollie, thank you so much. Oliver Crook there on the ground for us in Kyiv. We'll have special coverage on Ukraine throughout the day. Now let's get straight to the Bloomberg First Word News with Laura Wright. Hi, Laura.
Hi, Francine. The nominee for next governor of the Bank of Japan says the BOJ will need to consider normalizing policy if the outlook for prices improves, while backing a continuation of stimulus for now. Kazuo Ueda made the comments in a parliamentary hearing as part of the appointment process.
There are positive developments in the inflation trend, but there's some distance to achieving 2% in a stable manner. Once the stable 2% goal comes into sight, the BOJ can move towards normalization.
Sam Bankman-Fried has been charged with 4 new counts, including commodities and securities fraud in the FTX criminal case. Prosecutors allege the crypto firm co-founder and 2 others illegally sought to influence regulation of the sector by donating millions of dollars to politicians. The 30-year-old pleaded not guilty to earlier fraud charges and denies wrongdoing. A TikTok vice president has told Bloomberg the company found out about a European Commission ban via media reports. Theo Bertram says the EU did not speak to the firm before telling staff to delete the Chinese short video app. The Commission wants TikTok removed from mobile phones and corporate devices over security concerns. UK consumer confidence has rebounded by the most in almost 2 years as signs start to emerge that the worst inflation in 4 decades is starting to ease. GfK's confidence indicator jumped 7 points in February to -38. The reading is a 10-month high, but still close to historic low levels. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Laura Wright. This is Bloomberg. Tom Francine.
Laura Wright here in London, thank you very much. Coming up, it has emerged that Deutsche Bank looked at buying parts of Credit Suisse last year. We're going to have all the details on that Bloomberg scoop. That is next. This is Bloomberg.
We have only 8% of the ocean protected today, and our Earthshot is, as Patty said, 30 by 30. 30% of the ocean, at least 30% of the ocean protected by 2030. And we know that if we protect the right 30%, not only we will prevent the extinction of many marine species, but also we will produce more fish. There's going to be, these protected areas are going to produce a spillover that will exceed the foregone catch. So we're going to have more fish to eat, food security, livelihoods for people. And we know that for every dollar that we invest in a protected area, in a marine reserve, that produces $10 in economic output and creates more jobs. So it's a triple win for marine life, for food security, and for climate, and of course, for the economy. So that's the goal, the mission.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
As the figures have come in, and particularly the figures on non-housing services look to be running way above target level, I think the chances of a soft landing, which looked to be getting better a couple months ago, I think are now receding a bit.
That was former Treasury Secretary Larry Summers speaking with Bloomberg's Wall Street Week anchor David Weston, saying he sees worrying signals in the U.S. economy. Now, Bloomberg has also learned that Deutsche Bank looked at buying parts of Credit Suisse before the Swiss bank announced its overhaul last year. For more on all of this, let's bring in Stephen Ahrens, Bloomberg's German banks reporter in Frankfurt. Steve, I woke up, it's the first thing I read. I took a double take. I read it twice, 3 times. So what did Deutsche Bank actually look at? Were they ready to pay the price?
Well, I mean, as you know, the Credit Suisse is in a bit of trouble right now. And before the announcement of a new strategy in October, they were thinking about what to do, how to raise capital, what to sell. And Deutsche Bank was, of course, looking at what options might be available. They're particularly interested in asset management assets and wealth management assets. And we also know Credit Suisse has big, especially a very big wealth management unit. And I'm pretty sure Deutsche Bank would have been willing to pay a pretty substantial price for it had it come onto the market.
Stephen, what do we know about the likelihood of Deutsche Bank re-looking at a potential deal or some of these assets at least, and kind of what kind of time frame might we be considering?
Well, I think it depends a bit on Credit Suisse. The restructuring that was only announced in October is already struggling to gain traction. Outflows have been worse than expected. So if they have to actually revisit their own plan, decide they need to do even more and start selling assets again, then I'm pretty sure Deutsche Bank would be ready and go to their drawer, take out the plan, and run the numbers again, and then probably make a bid at some point if those assets did come to market.
So, Stephen, the hardest question I'll have to answer today is what exactly is of value right now in Credit Suisse? Is it the brand name? And we had heard speculation that maybe it was also, still a strong name in Asia, which is something that maybe there were potential buyers for. Or is it actually the operations?
I think it's a mix of both, to be honest. The wealth management unit, as I just said, is one of the core strengths of Credit Suisse. And of course, as we know, clients only will bank with a bank if they trust it. And the name plays a big role in that. It's been damaged, but it still has very many client relationships. And if it succeeds in rebuilding those, I'm pretty sure it can restore value to its franchise too.
Okay, Bloomberg's German Banks reporter Stephen Ahrens, thank you very much on the latest there around Deutsche Bank looking, at least previously, at some assets within Credit Suisse, and we'll see whether or not they come back for another bite at the apple. Let's check in on these markets then. 24 minutes into the European trading day this Friday. Just modest gains of 0.3% across the European benchmark, essentially unchanged of yesterday. The futures in the US pointing lower by around 0.3%. It is that importance around the core PCE deflator that is going to be in focus for Jay Powell and team and investors, of course, later today. You have some Fed speakers as well who are going to be commenting, so they may give some clarity in terms of the direction of future rate hikes. Across your sectors here in Europe, telecoms at the top of the list, gaining just 0.7%. At the bottom of the list, chemicals, followed by basic resources. Fran.
Now, coming up, Ukraine's energy complex, of course, has been a major target for Russia's forces since the invasion a year ago. We speak to the head of one of the largest Ukrainian energy infrastructure companies. That's DTEX. You're also looking at live pictures from Kyiv. Russia's invasion of Ukraine reached the one-year mark today with no clear end in sight as the United Nations General Assembly actually passed a non-binding resolution calling on Moscow to end the war. We also heard from China and Brazil offering dueling peace plans, neither of which is likely to gain traction.
Yeah, a 12-point peace plan from China. It's already been rebuffed by those in the US because it calls for an end of sanctions without really addressing the territorial concerns, of course, of Ukraine. Meanwhile, we have live pictures in Kyiv. President Zelensky there addressing his troops in the Ukrainian capital. Live pictures there of the Ukrainian president. We, of course, are on the ground in Kyiv. Oliver Crook bringing us all the latest. And we're going to have special programming as well, specifically focused on this 12 months since Russia's invasion of Ukraine. That special programming starting at 9 a.m. UK time. We're going to leave you with these live pictures from the Ukrainian capital. This is Bloomberg.
somebody says, I want to be, a person has an impact on society, what would you recommend that somebody do to train themselves and to work their way up to be somebody that's impactful on society?
Well, I think the first thing you've got to believe in something that you really care about. You know, I've been fortunate that over the course of my career, I've come up with things that have mattered to me, and I've pursued them. You know, the best advice I ever got was from Mike Bloomberg. And he said to me at one point, he said, show me somebody who's never lost, and I'll show you a loser. And I believe that if you believe in something, go after it, take risk. Obviously, they should be smart risks, but they should be around things that you really care about.
So you would see your legacy as being actually target ALS and helping to moderate the impact of ALS, if not curing it.
That's my final legacy. I'm proud of some of the other stuff that I've done as well. Transformation of New York after 9/11. I'm also incredibly proud of a lot of the companies we created at Sidewalk, but I feel like I've done a lot.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Bloomberg.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and these are your top stories. Asia stocks, U.S. futures fall as investors wait for key inflation data for clues on the Fed's rate path. The nominee to become the next Bank of Japan governor says policy normalization will need to be considered if the outlook for prices improves. And we're live in Kyiv today, while it marks 1 year since Russia's invasion, prompting the biggest mobilization of support by Western allies since World War II, and while Beijing puts forward a ceasefire proposal. So, Tom, what are the markets looking at?
Yeah, Fran, you're absolutely right. Look, the futures in the US are pointing lower, but here in Europe, we're actually seeing some modest gains, 0.3% across the European benchmark. It's interesting to see some divergence. We'll have a look at the sectors shortly between basic resources and energy. The DAX currently up 30 points, the FTSE 100 gaining 0.3%. Consumer survey, the consumer sentiment survey coming in midnight UK time, suggesting and showing a jump in terms of that sentiment, the highest level, or the biggest jump, I should say, in about 2 years' time. So maybe consumers here feeling a little bit more robust. Let's move it on to see how things are playing out across these sectors then. The last time I looked, travel and leisure was down at the bottom of the list. You now got basic resources. Yes, travel and leisure still in the red, just by a smidge. Basic resources, though, down 0.3%. Iron ore coming off more than 2%. Divergence within the commodity space, though, because Brent is rallying this morning, and that's bringing energy up to the top of the list, currently up 0.8%. Fran.
So, Tom, it's 1 year since Russia's invasion of Ukraine and what Ukraine President Zelensky calls a year of pain, sorrow, faith, and unity. The U.S. has pledged another $2 billion aid package for Kyiv and vowed further sweeping sanctions on Russia's economy. Well, joining us now from Kyiv is Bloomberg's Oliver Crook. Ollie, you've made the journey into Kyiv a year into the invasion. What's the situation like on the ground?
That's right, Francine. 1 year ago, dawn is when the city and the entire country was awoken by those explosions and aircraft overhead. And now it's hard to believe that we're here. We've been here. It was a year ago. And I think we forget the degree of shock of seeing those images of those military convoys crossing the border into Ukraine, the shock of realizing that there is a war beginning in Europe, and also, you know, and seeing the shock that Kyiv still stands today, right? On the way out here from Warsaw to Kyiv, you take the train, you go through Bucha, where there was that horrible massacre of civilians. You also realize how close the Russian military was to the seat of government here in Kyiv. But today, a lot of the things on the street are more or less normal. Just behind me there, by that golden dome, Zelensky himself is giving out medals to the military there. So people are being able to move freely 1 year into this conflict, and to the shock of, I think, many people of how this is going to turn out.
And meanwhile, Ollie, we know that the Russians have targeted the infrastructure, particularly the energy infrastructure of Ukraine. How has that been holding up?
That's right, Tom. I mean, this has been referred to as the energy war, and and so to speak, there are two fronts to this energy war. There is the one that is on the ground, which is that the Russian targeting energy infrastructure, and the Ukrainians have gotten extremely efficient at fixing that, putting it back together, defending it, shooting the missiles out of the sky. And this has been the focus. The Russians wanted to sort of win through a war of attrition through the winter. We've made it through the bulk of the winter without that happening. And then the second war is the war, of course, that's been waged in the markets. And we have calculated that last year, in terms of pricing on energy markets, this war has cost the world $1 trillion worth of energy costs. And it has caused a reordering of the entire global energy system. And energy supply, something that you have always taken for granted in the West, at least for the last few decades, was in doubt at one point. And this morning you see it. BASF cutting 2,600 jobs in Germany. A lot of this has to do with rising energy costs. No more cheap Russian gas. A lot of that gas is also used as feedstock for a lot of these industrial companies. So the impact on the ground here has been immense, but globally also incalculable.
Yeah, $1 trillion energy here. Oliver Crook in the Ukrainian capital for us. Thank you very much indeed. Let's stay with this story then. We're now joined by Maxim Timchenko, the CEO of DTEK. It's Ukraine's largest private energy infrastructure developer. So thank you for joining us this morning. We were talking there with our correspondent on the ground in the Ukrainian capital about the impacts on Ukraine's infrastructure, energy infrastructure. Where do things stand now? How much of that infrastructure has been taken out by those strikes? And what is your ability to get it back online?
Good morning. Today is just 1 year of our resilience in our fight on energy front. I think not many people expected that Ukraine can withstand such a scale of Russian aggression. So being defeated on military line, they started attacking our energy infrastructure. So more than 1,000 attacks of drones and missiles fired to Ukraine. We lost about 50% of our generation capacity. Some of our power stations were captured, some destroyed, some damaged. But today, all Ukrainians have heat and power. That's the result of our fight for this year. So unfortunately,
Mr. Timchenko, how much of that?
Yes, please.
How much of that electricity then are you importing? How much of your operations are still down because of the constant attacks from Russia?
So as of today, we don't import at all, very minimum level of power. So we had to start importing from 1st of January 2023, but thanks to all our restoration work, today we have enough capacity inside of Ukraine. And I think that this way we will try to keep the system stable so that we do not depend too much on import of electricity. So of course we have a huge disruption, but also we have drop of consumption by more than 35% during the last year. So now we, I would say, in equilibrium. So what we can produce, and that's enough for internal consumption in the country.
Okay, and what is your ability to make this energy infrastructure less vulnerable to these kind of attacks?
Of course, now, in the middle of this war, we should think about future. And the future of Ukrainian energy system is very technological, decentralized, relied more on renewables. And even today, we restored building one of the largest wind farms in Ukraine. And basically, this is how we see. We build more wind and solar. We build more battery storage. We do it decentralized so that Russian cannot attack large generation sources like nuclear or thermal power stations. And then now we know how to fight and how to provide this reliable system.
Mr. Timchenko, can you estimate how much money you would need to actually fix your operations to full performance, and whether you will sue Russia in international courts for those losses?
Definitely. So we, before war started, we operated 8 power stations. 2 of them were captured during this war, and 1 of them just next to Zaporozhye nuclear power station. So our loss estimation is more than $1 billion. As of today, we invested more than 200 million just to restore power supply and our generation capacity. And Russia will pay this bill. Definitely we go to international courts, and definitely we're more than confident, not only in our victory, but on the fact that Russia will pay for all these destructions, massive destructions they brought to Ukraine.
Okay, so you're determined to make Russia pay for this. What are you spending? What amounts are you putting aside to spend on that shift to renewables, which of course is about making that infrastructure more diversified, more resilient? And are you cooperating with European energy companies on that front?
Of course, I'm very grateful to our international partners. Thank you very much for this year, that with all your support, Ukraine feels strong, and with all Ukrainians feel very much confident that we will win. Definitely in reconstruction of Ukrainian energy system, we need to cooperate with energy companies. And again, I'm very thankful to energy companies who start sending us equipment from the first month of the war. So talking about renewables, one of our key partner company, Vestas, a producer of wind turbines, we agreed that with them, as I said, that we restore construction even now in such conditions. So now the tech is forming coalition of bidding. So energy companies, equipment producers, so that they prepare to come to Ukraine to invest, to help us to build more capacity, clean capacity, not only for own consumption, but also to export clean energy to European countries. This is our vision, and this is our way how to rebuild our energy sector.
Mr. Timchenko, there are a number of questions raised by EU officials about possible corruption actually in Ukraine, which could limit some of the access of funds given to the country. How do you respond to accusations leveled against your country?
So every piece of equipment sent to the tech has QR code put in database, made video and photo, and next week we announce a tender for auditing firms to come and to check every single piece of equipment sent to the tech, to our company. And I think it can be good benchmark for other organizations, so that we exclude any talks about corruption. So Ukraine cannot afford to keep narrative of corruption or corrupted country during and after this war. So we do everything possible from our side as a largest private company to show example and be benchmark for other organizations, how to make sure that we don't even have any thoughts about corruption, especially in relation to donors and aid we're receiving from our partners.
Mr. Timchenko, before we let you go, as you look ahead 12 months and we get back to a winter once again in Ukraine, what do you expect the infrastructure, the energy infrastructure of your country to look like? What is it going to be, what it will resemble in 12 months' time? And how confident are you're going to be continuing and able to provide that energy heating to the people of Ukraine?
As you rightly said, 1 year ago it was shock for the whole world, and of course it was shock for us. But we couldn't afford to be in this shock condition for more than 1 day. So from 25th, we start fighting. And now we had such a confidence 1 year ago, and now that we restore everything what was destroyed. And what I see in 12 months time is that Ukraine become one of the major exporter of clean energy to European Union. So we have more investments in renewables. We restore our power grid, and I think it's a good example. After liberation of Kiev region, after the first months of invasion, we managed to restore power supply in a recorded 45 days. So that's like examples that brings us confidence that in 12 months' time, Ukraine will have stable energy system, enough capacity of power generation, and be exporter of energy to Europe.
Thank you so much for joining us today. Maxim Timchenko, there, Chief Executive Officer of DTEK, Ukraine's largest private energy infrastructure developer. Now, we'll have plenty more, of course, on Ukraine throughout the day. We have Maria Tadeo and Oliver Crook on the ground in Kiev. Also coming up, Nigeria heads to the polls. We'll get the latest on what you need to look out for next. This is Bloomberg.
Fitzpatrick are the exception in finance, not the rule. Morningstar has taken an in-depth look at women in the industry, and the numbers are startling. The firm found that in 2020, women made up 14% of global fund managers. That's largely unchanged from the year 2000. Morningstar also calculated that while the number of women at the top of the corporate ladder has increased, it won't be until 2060 that women will reach parity with men in the C-suite. Studies have shown that increasing the number of women managers leads to better decision-making and moderates overconfidence. European Central Bank President Christine Lagarde insists that male domination of the banking industry made the 2008 collapse of Lehman Brothers more likely. As Lagarde put it, if it had been Lehman Sisters rather than Lehman Brothers, the world might well look a lot different today.
Could face bigger challenges. Britain's next was going to keep rain World Cup. This is a 3 as the economic picture does.
The BOK is getting ready to make a decision.
This is more than just Nigeria's first deep water port. It represents new hope for Africa's biggest economy. Officially opened in January, this billion-dollar Chinese-built seaport could help Nigeria regain its status as West Africa's most important maritime economic power.
It's a big, massive infrastructure, and we're indeed excited that in your own time, something fresh has been buffeted into this country.
Modernizing railways and expanding airports across the country are additional big-ticket items that China, among other international lenders, have helped finance over the past decade. But dwindling foreign direct investment and corruption have hampered the nation's development. Decaying port infrastructure had led to cargo being diverted to neighboring countries, such as Ghana. This in turn fueled higher domestic prices, contributing to Nigeria's 22% annual inflation rate. Authorities are now counting on Lekki to help reverse these problems. As the port ramps up operations, hopes are high that such projects will enable Nigeria to achieve more of its economic potential.
And Africa's most populous nation and largest economy heads to the polls tomorrow. The next Nigerian president will inherit no easy task. Widespread shortages of fuel and banknotes have led to protests and chaotic scenes at petrol stations and banks across the country. For more, we are joined by Bloomberg's Jennifer Dabasaja, who is on the ground in Lagos for us. Jen, what are the main economic issues then voters are primarily focused on during this election cycle?
Yeah, Tom, I mean, that package just talking about the port is really sort of at the crux of what voters are going to the polls about. And it's really the economy. There's a paper out today which sort of highlights that the economy is in turmoil. And you can see that on the streets here. Everyday Nigerians are dealing with a scarcity of cash, a scarcity of naira, a scarcity of fuel. And really, as we mentioned in the package, inflation is at a high. There's also unemployment and underemployment with a population that is largely young. And so young people and really voters as a whole want to see this economy revived and want to see a candidate who can come in and usher in a new wave of growth, especially because growth has stalled in this economy for the past few years.
It's very clear, Jen, that Nigeria is in turmoil. And the question is, can the new president fix it? What are investors watching for?
Yeah, I mean, really what we've seen from the leading candidates, I should note that there are 18 candidates in total, but there are 3 leading candidates at this point in time, and all of them have really been on the campaign trail talking about the economy and really trying to approach this from a perspective that maybe investors want to know. So one of those things, one of the reforms that have been proposed is cutting back on a fuel subsidy. Fuel, as I mentioned, is in short here, but the government last year spent $10 billion subsidizing fuel. And so really the international community has called for the subsidies to go away. There's also a rampant black market here of Naira. And so there is a desire really to reform and change the market exchange rate and get it back on track. And finally, there's a need to diversify the economy. We know that Nigeria is a major oil producer. Traditionally, about 90% of revenue comes from oil, but oil production has been low. And so there's really a need to diversify what the revenue is that this economy is bringing in. This is a largely informal sector, and so investors and the international community is really looking to see a government that can usher in and bring in some new business-friendly policies to support small and medium businesses here, and also open up the door for more foreign direct investment, because that's been dropping as well in the past few years.
Yeah, the twisted reality that a major oil producer has and faces significant energy shortages within its own domestic market for companies, businesses, and of course households as well. What is the mood like on the ground as this country gears up for this election? You have the current president, of course, former military man, and then of course you have security concerns in many parts of the country. Is this likely to pass smoothly? What is the mood?
That is the hope at this point in time, Tom. I mean, the candidates wrapped up campaigning yesterday on Thursday, and so really now it's up to the voters to turn out. And what we're hoping to see is largely peaceful, but what I can just tell you from my experience here, yesterday we saw the police deploying large army tanks just in case of potential tension and escalation that could happen. We're also told that the borders have been shut down and roads are going to be closed. I know you can hear a lot of cars at this point in time. When voting starts, it's largely going to be restricted. And we've been talking to a number of people on the ground who are really just energized about this potential new wave for this economy.
Jen, thank you so much. Great work, of course, there on the ground. Jennifer Zabazaja, live from Lagos, Nigeria. Now let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. The nominee for next governor of the Bank of Japan says the BOJ will need to consider normalizing policy if the outlook for prices improves, while backing continuation of stimulus for now. Kazuo Ueda made the comments in a parliamentary hearing as part of the appointment process. Bloomberg has learned that Deutsche Bank considered buying parts of Credit Suisse last year, including its asset and wealth management unit. We're told the German lender's plan was to be ready to move should attractive parts of the business come on the market. The project has been on hold since Credit Suisse announced an overhaul in October. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Laura Wright. This is Bloomberg. Tom, Francine.
Laura Wright, thank you very much. Coming up, BASF shares, they are lower after the chemical giant announces major job cuts. We're going to bring you the details of that story next. This is Bloomberg.
Crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure,
for something as universally important to human life as sleep. Mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, China Open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
Welcome back to the Open. 54 minutes into the European trading day. The benchmark here gaining 0.3%. Now, Bloomberg has learned that Xi Jinping is set to bring decision-making in China's financial system further, even further under his control, with the revival of a powerful committee to coordinate policy. A top position at the central bank could also be filled by a key ally of the Chinese president. Joining us now is Jill Desis, who is Bloomberg's China economy editor. Jill, what are the biggest takeaways? What do we know about the reporting on this?
Yes, so first of all, remember that this is all reporting. Nothing's been finalized yet and probably won't be finalized at least until the National People's Congress next month. But yes, ultimately, the idea of a consolidation of power under those people that Xi Jinping really trusts and respects is probably the biggest takeaway here. I mean, should the widely expected next premier of economic policy also take on the party secretary role at the PBOC? That would be the first time since the 1990s that somebody would hold both of those kinds of senior level, advisor leadership positions in both of those places. So yes, again, further consolidation of power. A lot of what we've already seen at the People's Congress late last year, this idea that Xi just wants all of those key decision makers to be fewer in number and also to be more loyal to him.
Thank you so much, Jill Desis, there with the very latest. Of course, on China, we'll have a longer-term implication or a longer-term outlook of what this means for China. We have also markets on the move, some stocks that we're watching.
Yeah, one corporate in focus for us today, and Oliver Crook mentioned this in terms of the connections to the energy space and particularly the ability or the lack of ability to draw in Russian gas going forward. That has had an impact, of course, for Europe's largest chemical firm. The stock taking a hit, down 4.5%, as you can see. They're cutting 2,600 jobs. They have also ended a €3 billion share buyback early. This firm then adjusting to a future without Russian gas. Across the European markets, the benchmark gaining 0.3%. Futures lower, though, in the US. S&P E-minis down 0.3%. NASDAQ futures lower by 0.6. The focus, of course, on the latest inflation gauge, the PCE index, an indicator out of the US later today, and Fed voices as well to give a steer. Coming up next, our special programming marking 1 year of war in Ukraine. This is Bloomberg.
what do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. What's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Good morning, everyone, and welcome to our special show marking 1 year since the Russian invasion of Ukraine. I'm Francine Lacqua here in London. Now, this hour will bring you a host of top guests, including the mayor of Kyiv, chief executives from Naftogaz, Ukraine's biggest oil company and gas company, and Colonel, the world's largest exporter of sunflower oil. We'll also speak to the president of Latvia on how the war has affected NATO's eastern flank. But first, let's recap the key geopolitical angles with our reporters around the world as the war enters its second year. Well, Maria Tadeo is in Kyiv following the latest developments and human toll of the conflict. Piotr Skolimovsky is in Warsaw. We'll ask him what more allies can do to help Ukraine, and Ross Matheson here with me in London to break down the key role of China. So let's start with Piotr, our Warsaw bureau chief. Piotr, what do they need more from their allies? What does Ukraine need into the second year of this war?
Well, first of all, ammunition. Ammunition is probably something that Zelensky and his team have been calling for repeatedly. Now, we know that both sides are burning through about 1 million shells a month. So, and we've heard from NATO chief saying, Stoltenberg saying that actually the production is not keeping up with how much they are using. So ammunition is the first thing, but obviously there is more that Zelensky is calling for. We've already seen, and we just had news breaking that Poland will deliver its first batch of Leopard 2 battle tanks to Ukraine today, as Prime Minister Morawiecki is there. But what Zelensky is calling for now is bring in fighter jets, and that's something that obviously allies are not really ready to go with. But that's something that's probably next on the agenda for him to ask them to request.
So, Piotr, can President Zelensky expect those extra ammunition soon, or those extra weapons? Piotr, can you hear me? We may have a bit of trouble with the connection, so we'll get back to Piotr very shortly. Our Maria Tadeo is also, of course, on the ground, and then we have world leaders talking in the next couple of hours. The person who has been masterminding our coverage for the last 12 months is Ross Matheson, our executive editor for international affairs. Ross, thank you for joining us. You've had an extraordinary team effort and team coverage to try and bring us up to date to what we've learned in the last 12 months. As we reflect on entering the second year of the war, what surprised you the most?
Well, it's extraordinary, really, thinking about that. The highest intensity war that Europe has seen since World War II, a large land war too. It was sort of the war that we didn't think was going to happen again. So you saw countries around the world over the years cutting defense spending, focusing very much on high-tech warfare. And what we've seen really in this moment is it's old-fashioned stuff, like Piotr was saying, ammunition, artillery on the ground that's really helped Ukraine push back the Russian forces. And as the war turns into the second year mark, those things remain very crucial because, of course, the fighting is still intense on the ground. It's in the east. Russia is contained there, but sort of mounting further attacks. And the question is, does enough ammunition come in time to stop that Russian offensive, and especially the more advanced stuff like battle tanks and fighter jets?
I remember, exactly a year ago, waking up, reading the news, and I think most of us were expecting, Kyiv to be taken within 3-4 days. We were probably expecting also the president to leave Ukraine. As we enter the second year, is there any end in sight? Like, how does this end?
It's very difficult to say. It just seems this conflict is going to now go on in some fashion. It's become very bogged down on the ground, as I said, and turning into one of those wars that just doesn't end very quickly. The question is, what is the end game? Because Ukraine's very clear. It's not going to cede any territory in talks. Russia's clear it's not going to leave that territory anytime soon. So the basis for any kind of negotiations looks very, very difficult. The question really is, as the war goes on, as the questions of unity still come up, as the questions of continued aid for Ukraine come up, do we get to the point where President Zelensky really gets, pressured, for want of a better word, from other countries to get to the table?
Where's China in all of this? So they put this 12-point plan that the U.S. rejected because they were talking about unilateral sanctions. Do they want peace, or are they on Russia's side?
China seems to want to have it both ways, basically. They obviously have a partnership with Russia. It's strategic. It's also on the trade and investment side. They don't subscribe to sanctions. They're very much about, they don't want to sign up to things they see as a US-led world order. That puts them in the Russia camp to some extent, but they're probably not really keen on the war itself, and they've been quite careful not to overtly support it. So they're trying to sort of do two things. One is to sort of not align with the West, but not align too strongly with Russia either. And that means that they're sort of in this middle camp, is sort of like, on the one hand, not criticizing Russia, but also not condemning them either.
Roz, thank you so much. Roz Matheson, of course, who oversees all of our government coverage worldwide. Now, these are live pictures from Tallinn, Estonia, where the European Commission President Ursula von der Leyen and NATO Secretary General Jens Stoltenberg are speaking, along with the Estonian Prime Minister Kaja Kallas, now marking the anniversary of the Estonian Declaration of Independence and also 1 year after Russia's invasion of Ukraine. Overnight, the U.S. has pledged another $2 billion in security assistance while vowing to impose further sanctions on Russia. Joining us now from Kyiv is Bloomberg's Maria Tadeo. Maria, what's it like on the ground 12 months on?
Well, Francine, what a year it has been for this country, and what a year it has been for this city in Kyiv. And the message from the Ukrainian authorities is that they're still standing. A year on, they are still here, which, as you alluded to, this was not a fact. This was not taken for granted a year ago when the war kicked off. I think also when you talk to people here, which to me is the thing that is absolutely remarkable, is this incredible resilience. They will adjust to anything. The question, obviously, when you ask them is there any room for concessions here? How do you see the way forward? They say they believe in their armed forces and that they believe that Ukraine will still emerge victorious. A year from hell, but nonetheless, that has done very little to change or to really damage and hurt the morale of the people here. It is a cold morning here in Ukraine, but nonetheless, you did see the Ukrainian president address. That's the number one thing he's doing today in a very busy morning for him. Address the troops, play the national anthem, also portrayed this almost as an existential question for Ukraine, and that is essentially how the day will kick off here. But we know, of course, it's a very busy day for President Zelensky, who really wants to portray this image and this idea of unity. This is not just a war almost against the Russian troops, but it is almost a war for the soul of the nation, of the Ukrainian nation.
Maria, is it too soon to talk about reconstruction?
Look, Francine, when you talk to people here, to authorities, but also the people, because they are so important here, ultimately, this is a war that's being fought on a political level, too, by the troops and the army, which have, in many ways, surpassed all of the expectations against what was supposed to be the second biggest army in the world. But when you talk to the people here, yes, they want to look to the future. When you talk to the authorities, yes, they say reconstruction is important. A lot of this is closely connected to to the European membership. Remember, Ukrainians for the time being have come to realize that NATO is not going to happen anytime soon, but they do see this European perspective, the country turning west, and those are incredibly connected. But as Piotr alluded to, for Poland, the number one thing, however, in their minds now is to get a hold of the ammunition, to get a hold of the weapons, because the one thing they insist is that for as long as they have the weapons, they will continue to fight. They will continue to fight for their land, which, by the way, includes everything. That's a question that I've asked to so many people today over the past 24 hours. Is there room for compromise? What if you give away Crimea? We put that to rest. What about the Donbass? All of them will say no. This is part of Ukraine, and we're never going to see it differently for the time being. We're going back to the 1991 borders. That is something that both the authorities, but also the population, the civilian population, also repeats nonstop.
Yeah, and you see really that resilience throughout all walks of life. Maria, thank you so much. Maria Tadeo there in Kyiv for us. Coming up, 1 year on from Russia's invasion and its failed attempt to capture the Ukrainian capital. We'll talk security, reconstruction, and more with the mayor of Kyiv, Vitaly Klitschko. That interview coming up shortly, and this is Bloomberg.
Coming out of World War II into the 1950s, you mentioned that the Fed had imposed yield curve control, basically to finance the wartime deficit. They were trying to move off of that. These are all sort of familiar themes to anyone in 2022, but why was that difficult for them?
Well, so let's get a sense of scale, right? So in 1941, there's about $40 billion worth of treasuries outstanding. In 1945, there's about $240 billion worth of treasuries outstanding. So that's about double the pre-war GDP. If you scale that to 2019 and say, okay, COVID expenditures on the scale of World War II, that's about $40 trillion. And the question is, who's going to buy it? Yeah. And
so what we're dealing with is kind of nothing. We got it.
In that context. And so that's where I guess the analogy breaks down. But it's a very difficult problem, which is who's going to buy the equivalent of $40 trillion today in debt?
News breaks. No one covers the world like Bloomberg.
6 people have died from these latest quakes, adding to the 41,000 plus people who've died in those major quakes 2 weeks ago.
A top Sam Bankman-Fried associate said to be nearing a plea deal.
How does that help build the case for the prosecutors against Sam Bankman-Fried?
Biden is here to say we will stay with Ukraine until the very end, and that's really a show of support as well for the allies.
Bloomberg, your global business authority.
Today marks 1 year from Russia's invasion of Ukraine. Since President Biden's surprise visit to meet President Zelensky in Kyiv, the U.S. has pledged over $2 billion in new security aid for Ukraine and vowed additional sanctions on Moscow. Now, we're now joined by Bloomberg's Maria Tadeo in Kyiv. Maria.
Yes, Francina, we're now joined by the mayor of Kyiv, Vitaly Klitschko, who's here with me. You're the mayor of a beautiful city, by the way, but what a year it has been for Kyiv. How would you describe the spirit of the people here a year on?
It's difficult to describe in a couple of words. It's huge challenges we have in this year. Actually, I'm very happy. I just came in from Munich security conference, and I'm very happy because I don't want to explain about this war in security conference. Everyone in the world see real face of this war. It's not a war, it's terrorism. It's genocide of Ukrainian population. Everything what we have in the last years of war, I can tell just very simple words, describing 2 words. Putin needs Ukraine, but don't need us, Ukrainians. It's we living in this year under the rockets attack and kamikaze drones, oppressive mood to our citizens. Instead, then they have totally different answer. I talking to the people and they told, better we live without electricity and heating, without water, but never ever with Russian soldier.
And I have to ask you though, the thing that's striking to me here is that you don't feel any panic, that people know what they have to do when the air sirens go off and that's it. But are you worried about what may come in the next 24 hours? There has been speculation that maybe something could happen. Yesterday was quiet, but what about tonight?
I'm more than sure it will be quiet tonight. Putin use and try to do it everything what we can. He sent soldier, he was not successful. He sent rockets, was not successful. Kamikaze drone, not successful. Putin actually try everything what he can to make a pressure to us, but we are still unbroken and we ready to defend our hometown, defend our country, because it's our family. We're fighting for our children, for our future.
And Mr. Klitschko, they say that in a war you need to know what the enemy wants from you. What does Vladimir Putin want in Ukraine? Is this about back to the USSR? Is this about believing that you two are inseparable nations? Is this about just expanding the power of Russia?
Putin, I tell, has unhealthy opinion for the world, and not opinion, the vision for. He want to rebuild Soviet Empire. They don't never accept Ukraine as an independent country. They told Ukraine was always part of Russia. We Ukrainians don't want back to USSR. We see our future as part of democratic European family. We're fighting for that.
And the people have demonstrated that for a long time now. But I want to ask you some final question. Given everything you've seen over the past year, the fact that here is quiet, but the front line, it's a very intense fight, are you more convinced now than a year ago that you are going to win the war?
Listen, here is illusion. It's very peaceful atmosphere, but a couple of 100 miles from here, it's a real battle, and we pay for our peaceful atmosphere here with expensive price, lives of our soldier, of our patriots, and listen, Russian soldier fighting for the money. The lives is painless. Nobody ready to give the lives for the money, but we defending our families, our children, and we fighting for future of our children. And I'm more than sure we have great motivation. I'm, as former fighter, tell you, it's not important how big are you, how strong are you. It's very important you will to win, you spirit. And Ukrainian soldier, Ukrainian patriots is very good motivated. I'm more than sure we stop the Russian aggressions. We win this senseless war. What do Russia against Ukraine?
Well, Mayor, thank you so much. Appreciate it for your time today. And Francine, obviously that was the mayor of Kyiv, Vitaly Klitschko, repeating to some extent also what President Zelensky said this morning is a thank you to the troops because the fight is still going on.
Fantastic interview. Our Europe correspondent Maria Tadeo with the mayor of Kyiv, Vitaly Klitschko, with a very heartfelt message there to a lot of the allies that have been supporting Ukraine. Coming up, we speak to Naftogaz Chief Executive Officer Alexei Chernyshev about the war and the many challenges facing Ukraine's largest state-owned oil and gas company. That interview is up next, and this is Bloomberg.
We have only 8% of the ocean protected today, and our Earthshot is as Patty said, 30 by 30, 30% of the ocean at least, 30% of the ocean protected by 2030. And we know that if we protect the right 30%, not only we will prevent the extinction of many marine species, but also we will produce more fish. There's going to be, these protected areas are going to produce a spillover that will exceed the foregone catch. So we're going to have more fish to eat, food security, livelihoods for people. And we know that for every dollar that we invest in a protected area, in a marine reserve, that produces $10 in economic output and creates more jobs. So it's a triple win for marine life, for food security, and for climate, and of course, for the economy. So that's the goal, the mission.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
From the world of politics to the world of business, Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg.
Welcome back to our special programming. We're also listening to Jens Stoltenberg, the NATO Secretary General, talking with also Ursula von der Leyen of the European Commission. He has moments ago said he has invited President Zelensky to the NATO summit in July. So we'll continue, of course, following that press conference in Eastern Europe from Mr. Stoltenberg. Now, Ukraine's largest energy company, Naftogaz, says it is working to ensure an energy-independent future for Ukraine. It follows Russian bombardments that have destroyed key parts of the energy network, plunging much of the country into darkness and the cold over the winter months. Well, we're now joined by the chief executive of Naftogaz, Ukraine's largest national oil and gas company. He's Alexei Chernyhov. Thank you so much, Mr. Chernyhov, for joining us. It's been a pretty incredible 12 months. What have you learned about the resilience of Naftogaz and how your operations have continued working despite the shelling from Russia?
Yes, thank you very much. We are now exactly of 1 year anniversary of this full-scale war and unprovoked aggression from Russian Federation. Ukrainian people are standing united. Ukrainian people are standing strong with the help of our allies and democratic society. Naftogaz is the biggest oil and gas company, national oil and gas company, and my task as the CEO of Naftogaz to ensure that Ukrainian people are guaranteed with supplies of gas and heating during this winter and further on. The resilience of Naftogaz is extraordinary. Actually, we have managed to keep our domestic production on the planned level, as well as we keep 12.5 million of Ukrainian households provided with natural gas and heating. Of course, there have been certain damages to our infrastructure and casualties.
Yeah, how much damage have you seen?
We estimate the damage to our oil and gas company of more than $1 billion USD. And just recently, yesterday, we had an attack on our centralized heating plant in Kherson. Today, we have the city of Kherson deprived of heating in the freezing temperatures. And we're doing our best, of course, now to fix this situation and to fix this object. But this is the way it's going on.
How much gas, sir, do you have in storage right now, and how will you prepare for the next heating season?
We are already preparing for the next winter, for the next heating season. And my plan to increase domestic production of gas in Ukraine, and we are moving towards this goal. We have increased it already. We have close to 10 BCM of billions of cubic meters in our storage right now, and we are planning to increase it during the course of this year by our domestic production.
So how much do you plan to invest in gas extraction this year? And actually, do you already have an estimate of how much money you need to rebuild some of the operations that you've lost?
We invest in our gas production every year. Naftogaz plans to invest into this area also in this season. We do count on the support of our international partners, and we do believe that Ukraine is capable to produce as much gas as it needs. So our goal is to count on ourselves and limit our imports already this year. And this goal is absolutely achievable once we will increase our production that we plan to do.
Do you plan to attract foreign companies to help extract gas? And if yes, how quickly could that come?
Absolutely. And we have that experience already. We are planning to attract foreign companies, and foreign companies are interested in Ukrainian potential with quite a significant resources of oil and gas production. Of course, the obvious situation of war and the limitations that we are facing right now, it somehow limits that interest, but I'm sure once the war conditions will allow, we will have this opportunity. Meanwhile, we continue our cooperation with international service company in oil and gas, the leaders, and we plan also to attract investors.
All right, thank you so much for your time today, Alexei Chernyhov, there, the Chief Executive Officer of Naftogaz, on an important conversation about not only global supply chains when it comes to energy, but of course the situation on the ground there in Ukraine. Now, what we know so far, China calling for a ceasefire between Russia and Ukraine in a 12-point proposal for ending the war. This is something that the U.S. has already said they will not happen. And then the NATO Secretary General, speaking there in Tallinn, Estonia, is saying he has invited President Zelensky to the NATO summit in July. Coming up next, we're joined by the Latvian President, Egils Levits. We'll be discussing NATO, Ukraine, Russia, and much, much more. This is Bloomberg.
Fitzpatrick are the exception in finance, not the rule. Morningstar has taken an in-depth look at women in the industry, and the numbers are startling. The firm found that in 2020, women made up 14% of global fund managers. That's largely unchanged from the year 2000. Morningstar also calculated that while the number of women at the top of the corporate ladder has increased, it won't be until 2060 that women will reach parity with men in the C-suite. Studies have shown that increasing the number of women managers leads to better decision-making and moderates overconfidence. European Central Bank President Christine Lagarde insists that male domination of the banking industry made the 2008 collapse of Lehman Brothers more likely. As Lagarde put it, if it had been Lehman Sisters rather than Lehman Brothers, the world might well look a lot different today.
The top names at the Fed are on Bloomberg.
Inflation's normalizing, but it's coming down slowly. I just think there's going to be a lot more inertia, a lot more persistence to inflation than maybe we'd all want. I'm hearing people still out there pushing price and trying to test where the levels of inelasticity really are. As the meetings go on this year, we'll see what happens. If inflation settles, maybe we don't go quite as far, but if inflation persists, maybe we'll have to do more.
Nobody covers the Fed like Bloomberg, your global business authority.
Russia invaded Ukraine in the pre-dawn hours of February the 24th, 2022. This after President Vladimir Putin spent months building up troops along the border. The unprovoked attack sparked the biggest flow of refugees since World War II. Over 8 million Ukrainians have fled the war. Tens of thousands have died or been wounded amid unspeakable brutality. But the impact extends far beyond the human tragedy. The fighting between two of the world's biggest food producers hampered exports from the region. Together, Russia and Ukraine had accounted for a quarter of global wheat trade and half of sunflower seeds and oil. Prices around the world surged, though they have since eased back. The conflict also caused the biggest European energy crisis in decades, especially in Germany, forcing countries to cut their reliance on Russian exports. Before the war, more than 40% of EU imports of natural gas came from Russia, and over a quarter of oil imports. No longer. The soaring prices helped fuel the fastest inflation in the euro's history, forcing the ECB into its most aggressive series of rate hikes ever. A year later, the war shows no signs of ending, although Ukraine has made advances against Russian forces using weapons mostly supplied by the US and Europe. It will take hundreds of billions of dollars to one day rebuild the nation. What comes next may in large part depend on Russia's moves, Western support, and Ukrainian determination, led by a president who's become a household name around the world.
Bloomberg's Tom McKenzie, they're reporting on Ukraine 1 year on from Russia's invasion. Now we turn to what the war in Ukraine, of course, has meant for other bordering countries. President Biden recently met with NATO allies from Eastern Europe to discuss strengthening their defensive posture against Russia with U.S. support. For more on all of this, let's get straight to Bloomberg's Europe correspondent, Maria Tadeo. Maria, this, just what has this war meant actually for a lot of the neighboring countries?
Yeah, well, Francine, it's twofold. One is validation. For a lot of the Baltics and Poland, to the countries that repeated for many years that Vladimir Putin had gone on what they believe was an expansionist revision of history. They now say they were proven right. This was not hysteria. This was no panic. Their assessment of the situation, in fact, was better than that of countries like Germany, which still believed you could have peace through trade. The more trade you had with Russia, the more normal a diplomatic relationship you could have. Obviously, when the war starts, that is out of the picture. You see here that Vladimir Putin had a very strong political instinct when he moved into Ukraine. On the other side, Francine, what you hear too, and this is why the situation is twofold for the Eastern European countries, is that they want to see a bigger presence of NATO. And now the Russians will blame NATO for this war partly, but when you ask any of the European leaders or the Eastern European leaders, what about NATO? What is your perception of it? They always say one thing: where there's peace, there's always NATO. Where there's NATO, there's peace.
And of course, Maria, Estonia has committed the most aid as a percentage of GDP to Ukraine in the world, just over 1% of total economic output. The country's prime minister says Ukraine needs all the military support possible so that they can defend their country and their freedom. Speaking exclusively to Bloomberg, Kaya Kallas said Western sanctions on Russia are working.
Russia can't be crushed because nobody's attacking Russia. There's one aggressor and one victim. Russia has attacked Ukraine, and Ukraine needs all the military support we can give so that they can defend their country and they can defend their freedom.
Thank you. And in terms of sanctions, what needs to be done next with sanctions? And what is your understanding of how well the sanctions are working on Russia when we're seeing Russia's official statistics that are showing that, for example, its economic decline is not as big as earlier predicted?
The sanctions are working, otherwise Putin wouldn't bring this up all the time, or the Russian propagandists saying that, you know, lift the sanctions, or, you know, nothing to see here, everything is fine. They are working. What we have to work on the European side is, of course, to deal with the circumvention of sanctions. Not only the sanctions that we put in place, but that they actually work and there are no loopholes. And that is something that we have to move on with, making, you know, circumvention of sanctions also criminalized.
And what is your prediction on when and perhaps how the war will end?
The war will end when Russia realizes it was a mistake. And when is that? It is very much related to the army doing the way they are. So if we provide Ukraine the military help, the signal to the army could be also that you can't really win this. I mean, we have seen Russia realizing before that, you know, war in Afghanistan was a mistake, so they went back to their country. So this is something that we need to see, that Russia goes back to their borders, and then the war will end.
Estonia's Prime Minister there, Kaja Kallas, speaking exclusively to Bloomberg. Maria, when you look at exactly some of the pitfalls, not only for energy security, we keep an eye on everything that could happen with China and Brazil putting this peace plan together. What do you think has been the most surprising thing? I remember, you know, waking up, and we've talked about this in the past, 24th of February, and actually thinking, look, Kyiv could fall in 3 days. We have not seen it. The resilience of the Allies has been quite astounding, and their commitment to weapons.
Yes, Francine, and I would actually agree also with you. The most vivid recollection that I would have to myself is that morning, and if you remember at the time, there was a European summit that was happening in Brussels. This was supposed to be a normal summit. We were ready for a normal summit, and it became the first summit of this war. Now, that shows that for essentially day one, there has been this support from the European side of things that has gone in crescendo. Of course, there's many red lines that are no longer a red line. Remember, at one point there was this conversation of should there be any type of energy relationship with Russia in the early days of the war. Obviously, we know that is over. Russia, as a big energy provider for the European Union, is done. When you look at the weapons, there was this concern of escalation, and we've seen that in reality, a lot of those red lines have been crossed. The question now has to do with the fighter jets, and this is what Ukraine repeats, and they say they want. They say they had 7 items on a wish list, and they have 6 out of 7. The one that is pending would be the 7th. The real question, of course, Francine, will be what happens with this European unity as the war drags on, because we hear the next few weeks will be crucial, but behind the scenes, when you speak to a lot of European officials, they say the ramifications of it, they're not going to go away in a few months. We're in for potentially a long war here.
Yeah, and Maria, of course, relative to their size, Latvia and Estonia have been the biggest donors of aid to Ukraine, both giving the equivalent of more than 1% of their GDP following Russia's invasion began 1 year ago today. Let's bring in the Latvian president, Egils Levits, and, of course, Maria still with us in Kyiv. Mr. President, thank you for joining us. When you look at the majority of Russians, and this is according to independent polls, the majority of them are ready to keep on fighting. A lot of them support the war for, you know, probably wrong reasons, but they support the war. How do you see this ending?
That means that the war would last for a certain time. There is now no possibility for a quick peace negotiations because Russia is ready to continue the war. The war could be ended very quickly when Russia stops the aggression and goes back. This is a result that we should all.
And President, what do you make of this? What do you make of this Chinese plan that has come out lately that calls for respective sovereignty of Ukraine, but also says there should be an immediate ceasefire? You know very well the Ukrainians say that's a trap. What do you think? So what about the Chinese peace plan that says they want a ceasefire, that they call for a ceasefire? Is that a good idea? Because the Ukrainians say it's not.
Mr. President, I don't know if you can hear me, but we have a question from Maria, who's in Kyiv, and she's asking about the Chinese peace plan. We had a Brazilian peace plan, we had a Chinese peace plan. Is there a nation that could sit down with Russia and get them to negotiate?
China's foreign minister offered that 2 weeks ago in Munich Security Conference that China will come out with a peace plan. Today we know the plan, and it seems that there is nothing that Ukraine could accept. So it's up to Ukraine to examine the plan, but I've heard that there would be no solution on the basis of this plan.
Mr. President, what kind of conversations are you having with the U.S.? What would make you feel more comfortable about the way forward?
Yes, 2 days ago in Warsaw, we had a meeting with U.S. President Biden, and the message is very strong. United States and Europe, also especially the eastern flank countries of NATO, committed to transatlantic unity to support Ukraine, and the goal is that Ukraine should win.
Do you expect the U.S. to place more military equipment in the Baltic countries to actually increase the defense and the ability to defend if something were to escalate?
There are two different things. One is support to Ukraine, and this is clear. The other is to strengthen NATO so that Russia will know that it would be useless to attack. And this is a concept of deterrence through credible military capacities. U.S. is considerably increasing the military deployment in Europe, in Poland, but also in the Baltic states, so that we can say NATO's eastern flank is much more safe now as maybe before. So for the peace, it's important to invest in military equipment, to invest in military capacities, and also to deploy the capacities towards eastern flank countries. And this is a common understanding of US and Europe.
But, Mr. President, what did you discuss with Biden about the capabilities of the U.S. and allies in putting extra equipment in the Baltics? Have you been given assurance, or at least have you been given hints that this could be attack helicopters or HIMARS?
We are constantly in touch with U.S. and U.S. presence in Latvia, in Estonia, in Lithuania is increasing. And I think this is the most important message also from this meeting with U.S. President Biden.
All right, thank you so much for your time today. That was the Latvian President, Egils Levits in Riga. And of course, we'll get back to also Maria Tadeo in Kyiv. Now, the war's impact on commodities, inflation, and the world's food supply chains continue to ripple through the markets. Joining us now is the Chief Executive of Kernel, the world's largest sunflower oil exporter, Levgen Esipov. Thank you so much, Mr. Esipov, for joining us once again on Bloomberg. What are your expectations for the extension of some of the Ukraine grain export corridors?
You know, the extension of this corridor is very the government also for the whole security system, because even in this year, we declined by 30% our productions in grains and in sunflower oil and sunflower seeds. and we are going to increase this for next year. But we need that this grain corridor should be opened for the next season. It's very important for Ukrainian farmers. Yeah.
Okay, we'll get back to Levgen Esipov, their Chief Executive Officer of Colonel. Coming up, also the U.S. pledges another $2 billion to Ukraine. China offers a peace plan 1 year on from Russia's invasion. We'll take a look at what is next for Ukraine. This is Bloomberg.
Coming out of World War II into the 1950s, you mentioned that the Fed had imposed yield curve control, basically to finance the wartime deficit. They were trying to move off of that. These are all sort of familiar themes to anyone in 2022, but why was that difficult for them?
Well, so let's get a sense of scale, right? So in 1941, there's about $40 billion worth of treasuries outstanding. In 1945, there's about $240 billion worth of treasuries outstanding. So that's about double the pre-war GDP. If you scale that to 2019 and say, okay, COVID expenditures on the scale of World War II, that's about $40 trillion. And the question is, who's going to buy it? Yeah. And
so what we're dealing with is kind of nothing. We got it.
In that context. And so that's where I guess the analogy breaks down. But it's a very difficult problem, which is who's going to buy the equivalent of $40 trillion today in debt?
Welcome back to our special program marking 1 year since the Russian invasion of Ukraine. I'm Francine Lacqua here in London. Now let's also return to the Chief Executive Colonel, the world's largest sunflower oil export, Levgen Osipov. Mr. Osipov, thank you so much for sticking with us. We were asking you about the corridor and whether you're expecting a possible extension, of course, of that Ukraine grain export corridor. Do you see a slowdown in shipments if that agreement still has a question mark around it?
Now it's a huge challenge for us, for Ukraine, and for world food security. But we actually believe that there is no other way how to keep the world security in food production. And in such case, we believe that all of our partners in the United Nations and our partners, Turkey, will help us to provide this corridor for the next season and for the future.
So are you expecting, or are shipments at the moment slowing ahead of a possible agreement?
Now it's very difficult situation because we export only 80 vessels per month, but we need to export 2 times more. And Ukraine exports to Ukraine ready to export such volumes, and our main customers ready to for this supply, but we just need to decide all of these issues with the inspections on Bosphorus. Yeah.
What are the biggest challenges for farmers 1 year into the war? Are there crops that you're planting more or less of?
You know, Ukrainian farmers are very adaptive, and we see that we are ready to work even in such circumstances. But from the other side, it's impossible to make a new planting and new harvest. Then your storage are full of harvest from the last season. And the grain corridor is the main issue now for us to clean our storages and we'll be ready for new planting and for new harvest.
All right, thank you so much, Yevgen Osipov there, the Chief Executive Officer of Kernel. Now joining us to discuss what's next for Ukraine is Bloomberg's senior reporter for international affairs, Mark Champion, and our Europe correspondent, Maria Tide, of course, is on the ground for us in Kyiv. Mark, you've been writing actually some extraordinary stories. You spent many weeks also in Ukraine in the past couple of months. What has been the one thing that you reflect on 12 months from the start of the war?
Well, it's just, I've actually been in and out of Ukraine since, you know, even before the Soviet Union fell. The first thing I reflect on is just the tragedy of it. I mean, it is just tragic, actually, both for the Ukrainians, you know, above all for them, but also for Russia. I think this is defining Russia in a way that will be simply sad for, you know, a generation or so.
But Mark, you also understand really Russia, the complexities of Russian politics and the economy. Do you foresee a channel where Vladimir Putin backs down on this?
No. Unfortunately not. In terms of the economy, this is an area, you know, if you think before the war last year, I think most people would have said that the main tool that the West had was sanctions, and that in terms of, you know, weapons, there was a limited amount that they would or could do. It's turned out the opposite, that, you know, it's not that the sanctions weren't tough, it's just that they haven't been able to make a really big impact, anything like what would be required in order to get him to change his mind, even if that was possible. You know, with weapons, it's been rather more successful, and largely because the Ukrainians have been willing to fight and extremely capable.
Maria, of course, it's very, very difficult to see some of those terrible images coming almost day in, day out about some of the front line and some of, you know, the war of attrition being fought. Where are we on weapons? We know that there has been much more support from allies than we would have thought even 8-9 months ago. Do you worry, and are you told behind closed doors that there are serious questions about how long this can last for?
Yes, and Francine, and if I may say, there was a very large motorcade behind us, which may or may not have been President Zelensky, but it could easily be, because remember this morning, to address your point of the front line and the battle that is still ongoing, he was with troops and repeating once again that the nation has to be grateful for their soldiers because the war continues. And when you're here in Kyiv, Francine, I must say it's a strange feeling, because on the one hand, you do feel like this is a fortress city. You do feel strangely enough that you're in safety, but the message again that was repeated by the Ukrainian president today is that this is a mirage. The fight is still going on. And again, that takes us back to the question of the weapons. The Ukrainian Foreign Minister, Dmytro Kuleba, he said they had a wish list of 7 items. A lot of the red lines have been crossed by now. This fear of escalations, obviously the biggest symbol of that was the Leopard 2 tanks. Now they're pushing for those fighter jets. But Francine, we're being told many times that in fact, beyond the fighter jets, one of the crucial things, it may seem simple, but it's really the ammunition. You can't have the soldiers that are not able to get their hands on stocks of ammunition to be able to fight this war. And that seems to be, for the time being, one of those logistical challenges that both Ukraine but also NATO says they need to fix. There needs to be this constant supply of weapons for this year. Last year it was about getting a hold of those weapons. This year is about maintaining the pace of the stock that comes here into Ukraine.
Mark, when you look at, you know, how this could end, and I don't know whether the Russia ceasefire plan is something that we had dismissed from the beginning because of, you know, the unilateral sanctions that they proposed would be taken off the table.
This is the China, yes, the China plan. You know, it has 2 huge problems. One is that it says there must be a ceasefire, and that implies, you know, on the current battle lines, and that would enormously favor Russia. So it's really impossible that the Ukrainians would say yes. And the second is, as you said, the sanctions, because the U.S. and Europe have imposed these sanctions, saying, when Russia leaves, when it ends its invasion, they'll get lifted. But basically, if the China plan was accepted, Russia would remain in control of the territory while the sanctions are lifted. It's not going to happen.
But we talk about the war in Ukraine, but is this really a proxy conflict between NATO allies and a Cold War-style bloc?
Well, when you read that document, it's very much China talking to the U.S. about China's problems with the U.S. So that is, that is certainly what Russia is saying this conflict is about. Now, China's saying that's what this conflict is about. I think objectively, you would have to say that, on February the 23rd last year, NATO had no intention of attacking Russia. There was no intention of a proxy war. That this is really is ultimately about the defense of Ukraine.
Maria, what happens next? I know today, there are questions, and you had a great interview, of course, with the mayor of Kyiv about potential extra attacks from Russia. Is there talk on the ground about why the Russian people aren't against this war?
Yes, there's many. And Francine, when we got here on the train, which was a 17-hour train to Kyiv, the first thing that came up in normal conversations with normal people that you meet on the streets was not panic, not fear, because I would not use that word. I don't think they're fearful. And that is the striking thing when you come from, obviously, the West. You come here and you see a city that was under attack a year ago, and you don't perceive fear. If anything, we're more fearful than the people who live here and have gone through this for a year. But the one thing they said is there is hesitation, also perhaps concerns to some extent, a level of alertness to what may happen in the next few days because of the one-year mark, whether or not Russia would intensify the missile attacks. I have to say, last night it was very calm. There were no sirens that went off. We were told when we got to the hotel, get ready for it, especially the next 48 hours. It may be dangerous. Nothing has happened for the time being. The mayor did say, however, you never know what's going to happen. They trust their air defense, obviously, that will block out this missiles. And in terms of what happens here, look, the one thing that we've picked up from Ukrainian authorities, but also from the people, we've had a lot of conversations over the past 24 hours, is this idea that the fight continues, that they really believe that they can win this war. And yes, it has been a very heavy price. And yes, obviously people pay with their blood. That was a message also from the president this morning. It really is about the troops that are doing this heavyweight, but just this resilience of the people to keep going. You do not perceive on the streets that they are tired, even though it's been a whole year now of a very difficult situation for a lot of people who had a very normal life up until a year ago.
All right, Maria Tadeo for us in Kyiv and Mark Champion here in London. Now, that's it for our special coverage, 1 year of war. We'll have more interviews, of course, throughout the day, including exclusive interviews with Ukraine's energy minister. That conversation, 4:40 p.m. London time. This is Bloomberg. Is the chance of humankind to really understand itself. How much of that is true? How confident? Did you actually overachieve? Did you, back then realize that we would be using AI in many different jobs? Was it slower or faster than you thought at the time?
I think if I had a 35 or 40 year prediction task, I would have been more or less on track as to where we are today. But I would have predicted steady linear increase over time. But instead, the field had very minimal improvements until the last 5 or 10 years. Then it really took off. I think we ended up in the right place, but I was very wrong about the trajectory. To this date, we still know very little about how the brain works, but these machines are getting ever more powerful. And I feel in some sense, we did end up learning what human intelligence is by learning what it is not. If we exclude all the things machines can do better than us as what makes us unique in our human intelligence, then now we can rule out many, many things, because AI or machine learning has become so good at so many things that what's left must be the key aspects of human intelligence.
Information you want, analysis you trust, everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Count Under the Close. Welcome to Bloomberg Crypto.
The war will end when Russia realizes it was a mistake.
The more weapons, more sanctions for Russia, more support for Ukraine, the faster we will be able to get to just peace.
This struggle will define in what world our children and grandchildren will live.
Brutality will never grind down the will of the free, and Ukraine will never be a victory for Russia.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards and Matt Miller.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. 1 year after the full-scale Russian invasion of Ukraine, China is floating a peace proposal that has little chance of winning Western broad support. The stakes are high as Nigeria prepares to elect a new president. Rising poverty and unemployment have led to instability and to violence. And investors are looking for today's release of the Fed's favorite inflation gauge. It's expected to show robust income and spending growth. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. And Matt, time to take stock a year on from the full-scale invasion that we saw by Russia of Ukraine. That's the geopolitics. We'll, of course, bring plenty of updates on that front. From a markets perspective, we're very much looking for clues on inflation from that PCE number later on today.
Yeah, exactly. We have to wait for that before we see what the Fed's preferred gauge of inflation looks like, and surely the markets are going to come starkly into focus when that number comes out. Until then, I think it's really all about geopolitics, because as you said, we're 1 year on from the war in Ukraine, and we've got an incredibly dramatic and important election in Nigeria that I think we haven't been focused on enough, so I'm looking forward to some coverage today. Take a look at S&P futures. Right now off about 0.3%. We were up about 0.5% in the close on the cash trade yesterday, so this takes down some of those gains, but the volume will likely be fairly light as everyone is waiting for these core PCE numbers that the Fed focuses on so closely. The U.S. 10-year yield up about 2 basis points, but again, lower than it was yesterday. Remember, this time yesterday, we were looking at 394, 395. So right now, we're slotted in just under 390 on the 10-year yield as they seem to be pulling back a bit because we were much closer to 4 over the last couple of sessions. The Bloomberg U.S. Dollar Index continues to climb another 0.25%. We're going to focus in on so many market participants, important traders and investors saying that the dollar is in for a multi-year decline, although it's been up all month long and gained a solid 3 to 3.5%. We're now at 1251.55, just 100 points away from the all-time high on the Bloomberg Dollar Index. And then you can see Bitcoin right now down about 0.2%. It is back under 24,000 at $23,830. So it looks like it's taken its lumps along with the rest of the market this week. It doesn't feel as volatile because it's such a bigger number than the S&P, but it has moved down 2 or 3% over the last few sessions. In terms of what we see in Asia, you've got mixed messages there. The Hang Seng down 1 2/3%. The Nikkei gaining 1.3%. So Chinese stocks doing poorly, or Hong Kong down, I should say, and Japan coming back after a holiday, closed for a holiday session, now coming back with a bounce. We do see also here again, more US dollar strength against the yen. You can buy more than 135 yen for your dollar. What do you see right now in Europe, Anna?
Yeah, and we heard from Ueda, didn't we? The nominee for BOJ governor overnight, Matt, that also weighing in. He seemed much more of a continuity candidate than perhaps some had expected. So that's part of the Asia story as well, Matt. And this is, to answer your question, what we see in Europe. A fairly flat picture in many markets. The German Xetra weighed down and pretty flat. Elsewhere, we see a little bit more strength coming through. The CAC 40 and the FTSE 100. The Spanish IBEX doing particularly well today. I'll move over and show you what's going on some of the individual names. But the Spanish IBEX being lifted by Amadeus, which is a heavy-weighted stock actually over in Spain, and it's in the travel sector, and that's certainly a feature of our story here in Europe today. Stocks on the move around the travel space, but this is the Madrid IBEX up by 0.6%, lifted by Amadeus. This is IAG, another aviation stock. This has rallied a long way into the numbers. So we got numbers from IAG, the owner of British Airways and Iberia. Those numbers, then it seems the outlook disappointing some a little bit, and the fact they want to take fuller ownership of one of their businesses is also worrying some, given debt levels at this company. BASF down by 6.2%. This is a really interesting stock, Matt, a company that you will have talked about many times when you were in Berlin, of course. And BASF stopping a buyback sooner than had been anticipated, cutting 2,600 jobs. This one big sign of the difficulties that the German economy has been up against when it comes to the energy story. Valeo, this is a car parts supplier over in Paris, 4.7% weaker on this one. The cash flow forecast coming out of this business, it seems disappointing some investors, Matt.
All right, we're going to continue to focus in on individual stocks. There are a lot of movers in today's, in Europe and in the pre-market here in the U.S. But right now, let's shift our focus really to the geopolitics of the world. Russia's invasion of Ukraine has reached the one-year mark with no end in sight. The mayor of Kiev spoke with Bloomberg's Maria Tadeo.
It's not a war, it's terrorism, it's genocide. Putin needs Ukraine, but he don't need us, Ukrainians. Putin actually try everything what he can to make a pressure to us, but we're still unbroken, and we're ready to defend our hometown, defend our country, because it's our family. We're fighting for our children, for our future.
So fantastic interview there with Vitaly Klitschko. Maria Tadeo, still in Kiev, joins us. A year into the war, Maria, you've gotten there after a long train ride. You can't fly in for obvious reasons. What was that like, and what's the situation like on the ground now that you're in the capital?
Yes, Matt, and it is a very long train from Poland. Obviously, the Ukrainian airspace is shut for security reasons. In fact, it's on that train that you kind of go through this click in your head that you're going into a war zone, because at one point you realize you're in a train that's full, but it's full of women. You don't see any men, and the men you see them when you enter Ukraine, and they ask for your papers and your checks, and they do all of this. The reason for it, of course, is that Ukrainian men from 18 to 60 cannot leave the country because the war is ongoing. I have to say, Matt, when you're in Kyiv today, it is a strange feeling, because on the one hand, it feels safe because it is a fortress city. You do see the army placed. You do see, obviously, men in heavy weapons. They have fortified the citizens a year ago since it was attacked, remember, in the early days of the war. But at the same time, when you talk to people, there's a sense that what may happen in the next few days. That's a question that comes up all the time. Not fear, not panic. I would not use those words. But there is this idea of what is going to happen tonight. It's a one-year mark. Will Russia do something? I have to say, yesterday night, it was pretty calm. Obviously, you go to bed and you try to keep an eye on what's going on behind the scenes and what you hear. It was very quiet, a very quiet night in Ukraine. The question is obviously what happens today, and it's a very sentimental day for the people of Ukraine too.
Absolutely, a time to reflect and think back on the year that has passed, Maria. But if we look at the path forward over the longer term, geopolitically, we see China trying to play a bigger role here, putting out a position paper on what it sees as the way forward. We see the US upping their sanctions, increasing the amount of money they're sending to Ukraine. What is the path forward that you're talking to people about?
Well, Anna, in many ways, it depends who you ask. Obviously, you've had the United States doubling down. By the way, the people here very grateful to President Biden. The idea that he was here on the Monday, this is something that you pick up in a lot of conversations. Thanks to President Biden, who came to Ukraine, you realize that a lot of this was a boost of morale for a lot of Ukrainians. The fact that the United States was here in person. Obviously, European officials, they continue to say stand with Ukraine for as long as it takes. We heard it today from the head of the commission. You also heard it from NATO, from the Ukrainians. Obviously, Ukrainian officials tell you they believe in victory, but most importantly, really, when you talk to people, as we have been for the past 24 hours, this has been a hell of a year for them, a terrible year. They will all tell you it's a nightmare year, but they still believe in their armed forces. And the Ukrainian president, in a ceremony that he did today to kickstart the day, once again thanking the Ukrainian soldiers, because here it may feel quiet, but on the battle line, on the battlefield, we know the fight continues. When it comes to China, well, Anna, that peace plan is finally out. I would say not a lot of it is new. They talk about respecting the sovereignty or the territorial integrity of countries, but there's two things that make it a no-go for the West. This idea that you got to drop the sanctions and go for a ceasefire. By the way, the Ukrainians continue to say a ceasefire is a bad idea because it will freeze the war. Russia will cement their positions, and essentially that means 20% of your country is gone.
Yeah. Maria Tadeo reporting there live from the ground in Kiev. She will be throughout the day to mark the one-year anniversary. Stay tuned to Bloomberg for more coverage on the war in Ukraine. Now let's get back to the inflation picture here in the U.S. We get data out today expected to show acceleration amid robust income and spending growth. The PCE deflator is the Fed's preferred price gauge. They like to look at the core. It's out at 8:30 a.m. Eastern time. Bloomberg's Valerie Teitel joins us now from London for a look at what to expect. Valerie?
Matt, this is the third and final major inflation gauge out of the U.S. We had the CPI and the PPI already for the month of January, and that big beat in that PPI number led many to revise higher their core PCE forecasts. The market is going to be laser focused on this core PCE month-on-month number. The current estimate on Bloomberg is for a 0.4 reading. Bloomberg Economics actually sees it at 0.5. But there could be some other unsettling things in this inflation report. One of which is that this disinflation that we've seen in core goods recently might come to an end. We could see core goods being an inflation impulse in this indicator once again. And important for the Fed, the super core metrics, services that could also show an inflationary impulse and show no signs of disinflation just yet. After this, we hear from 5 Fed speakers, 3 of which are the most vocal hawks, Mester, Bullard, and Waller. Will any of them today tell us definitively that their terminal rate, their dot, has moved higher? We get that new dot plot in their next meeting on March 22nd.
Okay, tracking those hawks and their friends, Valerie. Now, the big take story out on the Bloomberg terminal this morning, claiming that the dollar peak is behind us. Should we worry about short-term dollar strength, though? What's your thinking?
Look, it's all about what you think about the terminal rate and what we're pricing. Is it too high or is it just right? We're currently pricing 5.4% for the terminal rate when you look at front-end Fed funds futures. That recent rise, it's risen 50 basis points in the month of February. That's what's caused this short-term dollar strength. If you think the terminal rate will keep ratcheting higher, if in fact any of those hawks tell us today they're ratcheting their views higher, then watch out for some near-term dollar strength.
Valerie, thanks very much. Valerie Titel there with a look at the PCE deflator and the inflation information the Fed is going to digest. The markets will digest, and we'll see instant reaction in the pre-market and the open when these numbers come out at 8:30 and then at 9:30. Let's get a look, speaking of the open, at some of the stocks we're watching in pre-market trading in the U.S. There is a lot going on today in terms of single stock stories. First off, Warner Brothers Discovery, which is the parent of CNN and TNT, other TV networks, reporting quarterly sales that missed Wall Street's estimates, hurt by a decline in advertising revenue. In fourth quarter, sales fell to $11 billion. The expectation was for $11.2 billion. So as you can see, the stock is down 4.4% in the pre-market. Also, one we were waiting for, I guess with bated breath or some kind of breath, is Beyond Meat, the plant-based meat maker, reporting fourth quarter sales that beat expectations, showing progress toward its goal of becoming profitable. Fourth quarter revenue at Beyond Meat was $79.9 million. That's above the average estimate, far above, of $75.7 million of the analysts that we surveyed. As you can see, the stock is up 14% in the pre-market. Open Door said it expects to accelerate its timeline for selling through money-losing inventory. This has been a problem for a lot of real estate brokers, as high rates keep people from selling and from buying. The data-driven home flipper looks to move on from a tumultuous year when it maybe bought way too much stock at far too low a price. So there's a lot going on in the pre-market, Anna, and there's a lot going on in single stock stories in Europe as well. This is a market to watch this morning.
Yeah, absolutely a market to watch. Interesting ending there on the housing market. What does that tell us? What does the latest housing data tell us? And we've had some of that, haven't we, about the strengths and weaknesses of the U.S. economy. We'll talk about that and other market themes. We'll talk to Joost van Lenders, who's Senior Investment Strategist at Kempen Capital Management. He'll be joining us shortly. And more on Russia's invasion of Ukraine. We will speak with an expert on Ukrainian politics. Anna Corbett will be with us shortly with her perspective. Plus, Africa's most populous nation and largest economy heads to the polls on Saturday. We'll be live in Lagos in Nigeria. This is Bloomberg.
Thing in life I've often said is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like, but the more you could be you, the happier you will be.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards in London. Now, Africa's most populous nation and largest economy, heads to the polls tomorrow. The next Nigerian president will inherit no easy task as the country faces a decade of economic decline and violence. For more on this, we're joined by Bloomberg's Jennifer Zabasaja in Lagos, Nigeria. So, Jen, I know it's been incredibly difficult for consumers to get any kind of cash out of their bank accounts, and that makes this a really problematic economy and a dramatic election.
Yeah, Matt, and coming at a really terrible time for a majority of the electorate. You just mentioned there's been a decade of decline, and when we think about the majority of voters, 40% of voters, that's been their whole adult life. So at this point in time when the election is coming up, not being able to get cash, not being able to get fuel has really created a standstill in this business community. And so that is really what voters are talking about at this point in time, trying to see which of these candidates is really committed to reviving this economy. This is Africa's biggest economy. It is a massive oil producer, as you know. But if you look at really what this country has been doing over the past year or so, you wouldn't know that. The government has been spending billions of dollars on fuel subsidies, spending billions of dollars on servicing its debt. So really, the economy at large and everyday people here are just looking for somebody to really bring in a wave of job opportunities, a wave of growth for small and medium businesses, and really to bring down a lot of the cost of living scarcities and stresses that they're dealing with on a daily basis.
Yeah, not an economy, Jen, that's benefited necessarily from higher oil prices in the way that many might have assumed. So that's what people are watching for, voters are watching for and going to be voting on. What are investors looking for in this election, Jen?
Right. I mean, we know that these candidates really see the investor perspective as something that's very important because they've been on the campaign trail talking about all of their business priorities and their market-friendly approaches. So just one point of reform that the market is potentially looking for with this next candidate, with this next president, excuse me, is cutting back on these fuel subsidies. I mentioned billions of dollars. It was $10 billion in 2022 that the government spent on fuel. Not only that, we mentioned cash. A lot of this economy runs on cash, but there is a rampant black market. And so the exchange rate has really been something that this outgoing administration has not tackled. And just finally, I mean, there's been a number of restrictions put on import. And so when we think about the international investor and where they can put their money outside of oil and gas, because there is other opportunities here to invest, investors are looking for what else this administration is going to support, what policies they're going to put in place, what regulatory environment are they going to put in place so that less Nigerians are leaving this economy to flee to the US, UK, and other places and staying here and really drumming up the support and the revenue that this country needs.
All right, Jennifer, thanks very much for your reporting there. Bloomberg's Jennifer Zabasaja will be covering these elections for us live out of Lagos. Now let's turn to today's big take story on the Bloomberg terminal, which examines how the surge in the dollar has upended the global economy in ways that have few parallels in modern history. Some of the world's top investors now are betting that the worst of the dollar's rampage is over. Joining us to discuss is Christine Aquino, Bloomberg managing editor for markets. So I guess after this latest jump that we've seen, people think the dollar is going to continue its head downward.
Yeah, Matt. I mean, it's quite interesting. I think that view was largely formed toward the end of last year when we did see the dollar pull back from those historic peaks that we saw in 2022. But again, as you mentioned, we're seeing a bit of a revival now in the dollar, primarily because of what we have heard recently from the Federal Reserve, right? We've been once again reminded that inflation remains their top priority. Markets have been warned by Jay Powell and his colleagues that those peaks in the Fed interest rate might be higher than they're currently pricing. And I think that's really what's revived the dollar a little bit into the start of 2023. What I would say, though, is, you know, those highs that we saw in 2022, very, very historic indeed. It's not to say that the dollar won't be able to overcome those highs again or approach them, but I think it is a higher bar now just because of what we've seen from the Fed so far.
Yeah, it's interesting the way say that so this big take story chronicles a lot of investors who think we're done with the peak in the dollar, and yet, as we were hearing from our colleague Valerie Teitel, if we keep getting expectations around the terminal rate being pushed higher on treasuries, then surely that risks pushing the dollar higher again.
Absolutely, Anna. I mean, there's nothing to stop kind of restarting that narrative of a stronger dollar. But I think the nuance here is that those easy gains that we saw in 2022 could potentially be more difficult in 2023, just because, again, we've seen the bulk of interest rate hikes from the Fed, a lot of other central banks trying to catch up with the Fed as well.
Christine, thanks very much. Bloomberg's Christine Aquino with the latest on that big take story. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He called himself self-made day trader.
Yeah.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Lots happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot. We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
Welcome back. This is Bloomberg Surveillance Early Edition. A few breaking headlines coming through around America's support for Ukraine 1 year since the full-scale invasion of Ukraine by Russia. The Biden administration is announcing added security assistance. That U.S. security assistance package will total $2 billion. Confirmation then of the story we were carrying overnight that was according to people familiar with the story. We will talk about the markets. Look ahead to 2023 with Joost van Leenders, Kempen Capital Management Senior Investment Strategist. He joins us shortly. This is Bloomberg.
institution I know of wants you to serve on their board, and you're very involved in the art world. What is it about art that attracts you?
Well, art is essential in a democracy, David. Art is so important. We know what art does to young people. We know that exposure to art brings about higher levels of empathy. It helps people understand how other cultures, other people live, and it just brings out the kind of humanity in all of us. There are times when I have observed leaders use language that is inhumane while talking about other human beings, while talking about the world. And I think to myself, this person has clearly never engaged in beautiful poetry. They've never listened to the words of a great playwright. They've never sat and reflected on a beautiful painting or picture. Because if they had been really educated, had they really been exposed to the arts, they wouldn't find it possible to use this kind of language.
From the world of politics to the world of business, Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. 1 year after the Russian invasion of Ukraine, China is floating a plan for the way forward that has little chance of winning broad Western support. The stakes are high as Nigeria prepares to elect a new president. Rising poverty and unemployment have led to instability and to violence. And investors are looking for today's release of the Fed's favorite inflation gauge. It's expected to show robust income and spending growth. I'm Anna Edwards in London with Matt Miller over in New York, of course. And Matt, we see European stocks just keeping their heads above water, but the U.S. equity market futures picture deteriorating a little as we head towards that inflation print.
Yeah, it does seem like we're waiting. Well, we're definitely waiting for the inflation print, but we're waiting to see if the market is still pricing in inflation that falls quickly. That's what Cliff Asness at AQR told us on Bloomberg TV yesterday. He says there's further to fall. And so futures are down, even though the cash trade was up about 0.5% in at yesterday's close. Right now, S&P futures off a little bit more than 1/3%, and U.S. 10-year yield rising to 390, although it's worth pointing out that yesterday at this time we were at 394, 395, and over the last couple of sessions, we've been much closer to 4%. So even though investors are selling debt and the yield is rising right now from yesterday's close, we're still at a much lower level than we had been. The Bloomberg U.S. Dollar Index continues to climb, right now up 0.2% at 1251, and we're up 3 or 4% in the month of February. So there are investors and traders who say we're at the start of a multi-year decline. Of course, the high in the Bloomberg Dollar Index last year was at 1353, I think. So another 100 points, 102 points higher than this. But we've seen a jump lately. So it looks like, I guess, if you really believe the dollar is going to continue down, this would be a good entry point on the short side. Bitcoin, speaking of the short side, falling down below 24,000. It had been pushing up to 25 and didn't look like it was moving that much, well, in lockstep with the NASDAQ as it normally does. On the other hand, we're now seeing that decline. So for the week, we're off 2 or 3%, and that puts it in line with what we've seen in terms of stocks. There are a lot of movers today, as we've been telling you. Warner Brothers Discovery is one of those, the owner of CNN and TNT, reporting quarterly sales that missed Wall Street's expectations. It's been hurt by a decline in advertising revenue. Fourth quarter sales fell to $11 billion, and analysts were expecting $11.2 billion, so about a $200 million miss there. Beyond Meat did better than expected. The plant-based meat maker reporting fourth quarter sales that exceeded analysts' expectations, showing progress towards its goal as well of becoming profitable on the bottom line in the fourth quarter. Revenue was $79.9 million. The street was only looking for 75.7 in a survey compiled by Bloomberg. And Opendoor said it expects to accelerate its timeline for selling through money-losing inventory. This is one of those what are they called? iFlipper? Anyway, data-driven home flipper that looks to buy houses quickly at a fairly low price and then sell them at a higher price. The problem has been buying houses at a higher price than it should have been, and it's selling them at a lower price than it can. And as a result, Opendoor is off 5% in the pre-market. Block Inc., which joined a slew of tech companies that thought it would be so cool to change their names from the ones that we already know. This is, of course, Square, reporting fourth quarter EBITDA, beating the average analyst estimate. That's earnings before interest, taxes, depreciation, and amortization, essentially operating profit. Subscriptions and services reached a record in the fourth quarter and for the full year as well. Cash App, which is probably why they decided to go with Block, because it's another big business that they run. Revenue there outpaced projections, so Block Inc. is up 7% in the pre-market. Anna, what do you see in terms of the European markets and movers?
Yeah, this is what we see then, Matt. We've got European stocks generally holding their heads up, lifted by the Spanish market. We talked about that earlier. The Iberian market doing pretty well. We've got the IBEX, doing pretty well. We had Amadeus as one of the standout gainers in the travel sector. Not so much for another name in the travel sector, IAG, which moves lower. I seem to have picked only stocks that are falling by 5% or so today. One of those is IAG, the owner of British Airways and Iberia, and they have been delivering their earnings. The stock had rallied a long way into the earnings, though, and so expectations were high. The outlook didn't quite deliver, and there is concern around M&A plans at this business, given the debt levels that this company operates under. BASF, the big business over in Germany, chemicals and other things, down by 5%. And again, a signal of maybe just some of the tough environment that they're dealing with, ending their buyback earlier than had been expected, cutting jobs by more than 2,000 staff, and on the day that we got disappointing German GDP data out for the last quarter. So a lot of developments on the downside when it comes to Germany overnight. Valeo is down by 5%. This is a maker of parts for cars, and it seems the cash flow statements that this business over in France had to make disappointing to some investors, Matt.
All right, so we'll keep a watch on those stocks for sure. Joining us right now is Joost van Linders. He is the senior investment strategist over at Kempen Capital Management. And Joost, let's talk first about what you expect from the PCE number that we're going to get today. As I said earlier, Cliff Asness was on yesterday, and he said markets are still pricing in a pretty rapid drop in inflation, and that's not what he expects to happen. How do you see it?
Yeah, well, I think we've seen a bit of a shift there in those expectations, and also in the shift, therefore, for monetary policy. When you look at the past weeks, basically, also with the CPI and the PPI numbers in the US coming out a bit stronger, you see that the market has moved very much to what the Fed is telling, both in the peak and also to where the Fed funds rate will be at the end of the end of the year. So there has been quite a move. When you look at the data today, probably when you look at the monthly increases, a bit stronger than the previous month. The overall year on year also going up on the overall number. And there were also mentioned the consumption numbers which will come out, which will be very strong. We know that the retail sales data was strong. We have the cost of living adjustment to some of the government benefit programs for consumers, bringing in a lot of money. So there you get sort of the mix of strong growth, strong spending, and a bit of sticky inflation. So and I think that's also what the market is anticipating, and therefore I think the decline in the future.
So what's your view then on the terminal rate, where the Fed goes from here? Right now, our WERP screen is pricing in 4.58%, and it looks like we should go much higher than that. And where do you see the cuts coming? Because right now, WERP is pricing in cuts still this year.
Yeah, so I think if the economy holds and stays strong, then you won't get those cuts this year. If the economy drops back into a recession, and that looks a bit unlikely with the strong numbers that we had in January, but there are a number of leading indicators and recession indicators flashing red, we've had a lot of monetary tightening. So if if you get those rate cuts to the end of the year, it will be not only inflation, but in my view also due to a much slower economy. So that could happen, but again, then the economy will be weaker than expected, I think.
And what's your expectation for how weak it gets, Joost? Give us your thoughts on the soft recession, a mild recession, a deep recession, or no recession, as seems to be some people's thinking, which is just another way perhaps of saying a delayed recession into next year, Joost.
Yeah, well, I think no recession is not that likely because you have a number of reliable leading indicators pointing to a recession. And they can be wrong individually, but all being wrong is quite unlikely. We've had a lot of monetary tightening. It's fast. It's a lot that has been tightened, which still has to work its way through the economy. So I think a recession is likely. Will it be a deep recession? Probably not so deep because we don't have big imbalances in the U.S. economy in terms of investments, credit growth, and so on. So it's more sort of a normal inflation recession, which has to go out of the system. So not a very deep recession, but yeah, a couple of quarters of negative growth. Yeah.
Yeah, as Matt was mentioning the work function, we'll pull that up, and he was rightly pointing to what people expect in March, which is an implied rate of 4.88%, but obviously going higher from there and getting up to 5.347% a little bit later on, around the middle of the year. In terms of the timing then, if that's the trajectory for rates, Joost, and that's your thinking around recession, what do we do with stocks? Is there room for stocks to rally at any point, or how do we time all of this?
Yeah, that's a bit tricky because it looks like the recession is delayed, right? The first quarter is going to be quite robust, also even only with the numbers that we had in January. But I think there are two things. One is the implication for monetary policy and yields and so on. So that is currently priced in the market, and that's why you see the market struggling. And then if you get more signals of recession and further downgrades in earnings, I think that would be the second leg. So we are cautious with equities. We're underweight U.S. equities. Also, given the valuations have increased, both on a sort of an absolute level, but also when you look at equities relative to bonds, relatively unattractive. So yeah, we think that the market maybe will tread some water for the meantime, as long as there is still a possibility of a soft landing. But when you get more signals of the recession and more earnings downgrades, we think that the market will go down.
Joost, thanks so much. Thanks for joining us. Joost van Lenders of Kempen Capital Management joining us this Friday to talk about market expectations. Coming up today is an important day, of course. It marks 1 year of war, a full-scale war in Ukraine. We will speak with an expert on Ukrainian politics, Anna Corbett, with us shortly. This is Bloomberg.
What's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes. Or yes. Not keeping, look, people have conviction or if they invest for the right reasons, just keep at it.
The top names in business are on Bloomberg.
I think the future of autonomy is real for civil. It's going to take time. Everyone's got to build confidence. We need a certification process that we all have faith and believe in. As you may know, we have an application on an all-electric autonomous airplane we refer to as WISC. There's so much to learn, so much to do, but it is being done.
Nobody covers business like Bloomberg, your global business authority.
The more weapons, more sanctions for Russia, more support for Ukraine, something that we have been saying all this year. The faster we can get all the capabilities, the faster we will be able to get to just peace.
That was Ukraine's ambassador to the U.S. speaking exclusively to us here at Bloomberg. Joining us for more is Bloomberg's Washington correspondent, Anne-Marie Horder. She is in London today after traveling with President Biden in Poland, from Poland this week. So, Anne-Marie, the resolve of the president and the U.S. seems to strengthen even as the resolve of President Putin and Russia strengthens in terms of this war in Ukraine. Where do we stand?
Yeah, that's exactly right. And we're going to hear more from the White House today. We already got a fact sheet with them really highlighting what to expect in terms of fresh sanctions on this one-year mark. So at 9 a.m. on the East Coast, the president will be having a virtual meeting with President Zelensky and other G7 leaders. And what we know that the White House is going to be talking about is fresh sanctions when it comes to about 200 or so individuals, about 90 or so companies, and not just in Russia, but in China and other countries that the Commerce Department says that are evading sanctions, that are helping Russia. All of this is going to be announced today, as well as fresh tariffs on metals, chemicals coming out of Russia. So this is just another way for the USA. They are trying to penalize Russia and show their support for Ukraine.
Yeah, we certainly heard a little bit about those sanctions already today, and the US saying the cost to import Russian aluminium will rise significantly, Anne-Marie. What about the relationship with China here? Because I know that President Biden has spent a lot of time talking about that, as well as the relationship with Russia. And China coming out with what they call a peace plan, what looks more like a 12-point sort of position paper. What kind of Western response is that likely to be met with?
Well, we've already heard from Jake Sullivan, the president's national security advisor. He gave a CNN town hall last night, and he said China could have stopped after the first rule, which was basically talking about sovereignty. This is being met with a ton of skepticism in the West, and partially that is because they feel like China should not be the one to come up with this peace plan when they don't feel that China is neutral in this fight. I mean, what we've seen so far from China on the heels of Wang Yi in Moscow talking to Putin, saying that our relationship is solid as a mountain. You have Xi Jinping calling Putin a number of times over the course of the past year, but not engaging with President Zelensky. So the West just views this as really not an independent, and it's not credible at all. Also, yesterday, the United Nations passed a resolution on Ukraine. China abstained. If they really wanted a peace plan, I'm not sure why they would abstain from something like that.
Well, and isn't there talk of China also arming Russia in terms of this war? I know that they want to paint themselves as kind of a peacemaker, but obviously that can't be the case if they're supplying armor.
Well, exactly right. That's the contact Xi Jinping wants, right? He wants to be seen domestically and also to some of these developing countries that are struggling when it comes to food security, when it comes to energy security, that he is out there trying to be this global statesman. But we heard from Secretary Blinken warning that there could potentially be this lethal material that Beijing is willing to provide Moscow so Putin can continue this war effort. On top of that, Der Spiegel is talking about the fact that they're seeing this potential already for some sort of lethal weapon arms agreement between the two. Obviously, this is a red line for the United States. What remains to be seen is what kind of response, though, it would be if they were to cross that line.
Yes, and I know that from a sort of international law perspective, there is a distinction made between arming an aggressor state and arming a state that is defending its own territory. Anne-Marie, thank you very much. Bloomberg's Anne-Marie Horder with the latest on the Washington view, if you like, of of what's happening in Ukraine. Let's take stock 1 year into this full-scale invasion of Ukraine then. Anna Corbett joins us, an expert in Ukrainian politics, former associate fellow at Chatham House. Anna, thank you very much for joining us. The thoughts, of course, 1 year in, we're reminded of the shock that everybody felt, not least those in Ukraine, by the invasion. What do you think can bring an end to this war, Anna? Do you see anything that can bring an end to the war? Will it all be about a military defeat for Russia, or is there anything else that can stop this war?
Thank you for having me, and thank you for putting this question. Well, I would say that we are now not seeing the final result, and the final result is not predetermined. It depends on a number of factors. And these factors include several components. A shift from treating Russia as a contributor to, or an integral part, even if difficult, to international security, energy, trade, and other arenas, to a disruptor, a source of instability, and unreliable actor. The end of engagement policy that many countries and governments, especially in the collective West, practiced towards Russia before, hoping to keep it as a constructive counterpart. And a shift to new realism from the heavily Russocentric analysis of Russia and its neighborhood before, in politics, diplomacy, security, and other domains, to increasing consideration of the position, capabilities, and interests of other countries in the region. There is another point to this ongoing process, which is the realization of security capacity gaps in, I would say, the collective West, because as I see it, the major change that has taken place in international politics during this year has been in the collective West, as well as in the region around Russia. And so Russia's war in Ukraine has forced the countries of, well, Europe and the collective West to revisit their security vulnerabilities, military capacity, supplies, energy dependency, and other elements of hard security. It has also highlighted...
Anna, I'm sorry.
Yes?
Let me just get your take here on Vladimir Putin, because over the last few days, I've heard a lot of people predicting, how this war will end, and I just don't see an end as an outcome here, at least not in the near future. Is there any historical evidence of Vladimir Putin backing down on things in the past? He doesn't seem like the type of leader that would exit, without a total failure. I mean, the end of Putin is the only end of this war that I can imagine.
I could agree with you. The thing is that the end of Putin or the change of regime in Russia, so far, I don't see the factors that could enable that. Of course, we could have like black swans, but so far, I don't see the factors that could enable this. What can enable the change of Russia's politics, and has enabled it to some extent, is Ukraine's capacity to resist. And that demands its partners, the West, to supply it with as much support in terms of finance and weapons as it needs, not just to resist, but to win. So I couldn't be able to tell you, or anyone couldn't be able to tell you when the war will end. But the result is determined by the actions and the decisions that are taken now.
And is it in the hands of Western decision makers, Anna, then, as to the extent of what they are prepared to supply to Ukraine?
It is as much in the hands of Western decision makers, and they have already taken a number of huge steps that before, in the run-up to February 24th, were kind of unimaginable or unthinkable, as well as it's in the hands of Ukraine itself that has been a crucial factor of making sure that Russia does not accomplish its goals.
Anna, thanks very much. Thank you for joining us. Anna Corbett, expert on Ukrainian politics, formerly of Chatham House. Coming up on the programme, Latvia's Deputy Prime Minister. In fact, later today, Artis Pabriks will speak to the programme. That is at 1:30 p.m. in New York, 6:30 p.m. here on Bloomberg TV. This is Bloomberg.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. Yeah. There's nothing closer than the phone in your hand.
Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. And Matt, we mentioned the BASF story, the big German chemical giant. We talked about this a little earlier on in the program. That stock under pressure today, down by more than 5% in German trade. This on the back of what they've had to say about their numbers and cutting back on staff, more than 2,000 jobs to go there. They're also ending a buyback earlier than had been expected. And now giving us some lines on where all of this is coming from, really. And of course, the gas decisions that have been made in Germany are crucial to a business such as BASF. They say the German GDP is suffering due to the gas crunch. The gas savings have been a massive output drag. And this on a day where we got actually German GDP data that came in worse than expected.
Yeah, I mean, I think we very often we spend time talking about how the winter has been warmer than usual and the gas use hasn't been as bad as we expected. And certainly that's true, and you can see it in natural gas contract prices. On the other hand, it has been a real problem for a lot of big German manufacturers, and a company like BASF needs more gas than most. So it's very interesting, and you can see that it obviously affects earnings deeply in not only chemicals, not only Germany, but probably across Europe as well. I want to point out that we are looking forward to, in just about 2.5 hours, a PCE number, that's the core deflator or an inflation number that the Fed prefers as its gauge. The core number, which is what the Fed pays most attention to most closely, is expected to come in at 4.3% year over year, and it needs to get much closer to 2 before the Fed stops raising rates.
Okay, absolutely. We'll look ahead to that PCE number. We'll have plenty more of that on Bloomberg Surveillance. That is it for Early Edition. This is Bloomberg.
Chris, can I ask my landlord for a rent cut in the next couple months? Like, is that reasonable?
Well, I guess it depends when you signed your lease, Joe. It sounds like you got kind of one of those
pandemic deals that, particularly in New York City, where rents actually fell really sharply in that first year of the pandemic. So we are really seeing the market having turned a corner a little bit over these past few months. Prices have been coming down for 4 straight months now in our national rent index.
Wow.
But, if you're still paying that late 2020 level, then you might not necessarily be eligible for a discount at this point.
Good point. All right, I have another question, which is so I have 2 kids, but unlike other people, I actually am cool, and I don't want to move to the suburbs. I want
This episode is just Joe taking advice on handling his rent.
I just want to point out, I really like my landlord.
You love your landlord?
She's very attentive. We have a very good relationship. So even though I started the episode saying I was anxious, if she is listening to this, I hope she hears that I really enjoy where we live, and I really enjoy our the landlord.
She should factor your consistency into her pricing algorithm.
We've never been. Yes, exactly.
Excellent.
When innovation strikes, Bloomberg Technology is there with the news and analysis you need. Every weekday, only on Bloomberg.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Count Under the Close. Welcome to Bloomberg Crypto.
The market's basically priced for the Fed to be hitting their targets all the way into perpetuity.
With a 3.4% unemployment rate, you just don't get a recession.
It's remarkable that the Fed has tightened as much as they have, and you don't see a labor market that is certainly not shedding labor.
The benefits of the decline in inflation, we're now at the bumpy path, and the question is, are we plateauing?
When investors finally do start to look across the valley, the turn will be very, very quick.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
A year of pain for the people of Ukraine. Thousands of lives lost to Putin's invasion of the country. Today, Tom Keene, a milestone we all hoped we wouldn't mark.
1 year on, a milestone of wars that usually take longer than 1 year. It's going to be really interesting to see, John, how any and all recalibrate, and particularly with Mr. Putin's comments this week. The phrase that I see out there, particularly in the English press, is Mr. Putin this week doubled down. How do we double down?
Well, looking forward, Tom, I think we face the very real risk now of escalation. Der Spiegel over in Germany reporting in the last 12 hours or so that Russia's in talks with a Chinese manufacturer about buying 100 drones. Where would that leave this war?
We've got a great set of guests, including Maria in Kyiv, Anne-Marie Horton on the road in London. And the key guest today around that question and insight, John, is Daniel Tannenbaum will join us from Wyman Gordon. He's expert on the efficacy of sanctions. Have they worked, and will additional sanctions work?
1 year of war in Ukraine. Full coverage coming up through the rest of this morning. Let's begin by getting you through the price action just briefly. Equity futures negative 0.4% on the S&P in yesterday's session. Pretty messy one that we can discuss in just a moment. We managed to snap that 4-day losing streak, but still heading towards the first 3-week losing streak of 2023. Equities just a little bit softer. Yields higher by 2 basis points, trying to reclaim 390, 389.84 on a 10-year. Tom, tons of Fed speak today. Waller, Mester, Bullard, some of the hawkish voices out there.
Maybe they're going to speak after the economic data. We get a lot of economic data at 8:30. You mentioned, I think yesterday, we're starving to get to the delayed jobs report for February. What is it, John? March 10?
March 10th,
How odd. How usually, folks, it's the first Friday of the month, and we're way past that. Okay, fine. But I agree the data along the way is really going to help us gauge that. And what I see, John, is we're in, we're out. And the way I mostly gauge that is short squeeze potential. And I believe in the last couple days, everybody's loaded up on gloom, which is why Bramo's not here. She's in treatment. Bramo is fine.
Bad news is bad news, and good news is bad news.
Yeah,
How many times I've
she
heard
called
that
in. She
so
said
far this week.
She called in. She said the gloom level is just, it's a conundrum and an enigma, and Bramo's out.
Wrapped in an enigma, I was told.
Very wrapped.
By a wise lady yesterday. Tom, we've got to talk about new leadership at the BOJ as well. We've got a bit of insight in the last day or so. This from Kit Juice of SocGen.
Yeah, that was a great note.
Larry Summers told Bloomberg we should think of Kazuo Ueda as Japan's Ben Bernanke because they attended MIT at the same time and had the same thesis advisor. Whether that's an encouraging thought is up to you to decide. Is that an encouraging thought, Tom?
It's an encouraging thought in that the chemistry of the school on the River Thames, I was going to say, on Charles River. That's what it is. Charles is king. Right. Thank you. Anyways, I'm going down in flames here. MIT has a different feeling, and what it is they have growthiness. They own growthiness back to 1957 and Robert Solow. And this guy, like Bernanke, was trained on the mystery of economic growth. And that's what's a threat in Japan, is what everybody agrees is a busted thesis. How do you get out of it and maintain some sense of levelness or even, dare I say, growth?
Can we have a shout out to Stan Fisher?
Yes.
I mean, come on. Is this another student of Fisher after Bernanke? Draghi, we got another one.
Professor Fisher told me once, this is a great story. He was in class. He's a young kid, I'm sure brightest kid out of Rhodesia in England. And Paul Samuelson, Larry Summers' uncle, was so angry at Fisher, he grabbed the chalk out of Fisher's hand and threw it against the wall. That was the intensity that Ueda and the others were weaned on. There's an acuity to MIT. It's at other schools as well. Carnegie Mellon, I think, would be one. There's an acuity, but this guy's different than what we've seen with an LDP government monetary linkage in Japan.
It doesn't look like we're backing away from that stimulus effort anytime soon in Japan, and we'll try and pick up on that story when we talk about the Japanese central bank going into that March 10th meeting. March 10th set up to be an important day. March 10th, the last meeting at the Central Bank of Japan for Governor Kuroda. And then that morning, we get payrolls as well. Max Kettner joins us now, Chief Multi-Asset Strategist over at HSBC. Max, good morning to you. You've nailed this market year to date. You came in, you dropped your max underweight call on equities, and equities ripped. I just wonder if you're changing your mind now relative to what we've seen in the last couple of days.
No, I don't think so. I think it is quite remarkable, the bearishness and perhaps the intensification of the bearishness that we've seen over the last couple of days. Now, of course, I think U.S. equities stand perhaps in a little bit of a tougher spot, right? Tactically, they've outperformed a little bit too much if we compare it to long-dated real rates, if we compare it to interest rate volatility, for example. So perhaps there's a bit of correction potential in U.S. equities still, fine. But we were pretty vocal, and we've been pretty vocal over the last couple of weeks as well, that whenever we are going to see such dips, we'd rather be taking these as opportunities to buy rather than really throw in the towel. And if anything, if we look at other markets and markets we prefer in equities, for example, like the Eurozone equity market, that's just a couple of tenths of a percent away from the all-time high. So yes, things might not look as good in US equities, but in other equity markets, such as the Eurozone, things are pretty good. They're pretty okay.
Max, is amazing. In about 10 minutes' time, we're going to have this conversation on Ukraine and talk about how dreadful this war is on the Eurozone's doorstep. And at the same time, we're looking at an equity screen year to date. In France, up 13%. In Germany, up 11%. In Italy, up 15%. Max, why can that continue?
I think it boils down really to the overall economics and to the earnings outlook, and especially to expectations, right? The reality is that we went into the winter of 2022 and 2023 with extremely bearish expectations, right? Remember that perhaps 3-4 months ago, consensus was basically positioned for an absolute calamity to happen in the Eurozone, right? A gas crunch, gas prices shooting higher, so real incomes being squeezed even more, and so on and so on. So we had very, very pessimistic expectations. That is only just started to really perhaps turn a little bit when we look at consensus GDP expectations, for example, in the Eurozone in particular. They've only started to really rise ever so slightly at the start of this year. The same thing goes for earnings expectations. Look at earnings expectations. I do agree that for the full year, they still look a little bit too high. But look at the S&P. S&P earnings expectations were above $57 just 3 months ago. We're now below $51. How on earth can we come up with a really, really bearish near-term picture if we see such bearish expectations already for the near term?
Max, I want you to help me with the calculus of the moment. This is a theme I've been talking about all week, boring people to death, in which we're moving so fast, Max, and as John mentioned, you've been great at the moving fast of it, that I'm really leaning on 3-month annualized data. Are you doing that at HSBC? Are you having to shorten in and look at 90 days of data and think from there?
In some parts, yes. So I was a little bit puzzled, to be perfectly honest. At the start of the year, we had quite a bit of pushback from clients who would say, well, you know, when you look at the December activity data out of the US, look at retail sales, industrial production, that is clearly indicative of a recession, right? So clearly, why are you going bullish now? This is the wrong time. And conversely, now when we had this sort of a bit of a rebound in the January data, now people are saying, oh, this is the big re-acceleration. We're sort of in the middle. Let's be honest, right? You guys will know it better than me. But if we remember in December, I think the US had quite a bit of a tough time when, you know, you had minus 40, minus 50 degrees Celsius. And of course, some of the activity data was reflecting that. And of course, then on the month in January, we had a bit of a rebound. I do think we're sort of in the middle. Growth is definitely not as weak as people expected 3-4 months ago. So we're definitely in global growth terms seeing some acceleration, but I don't think that it's going to be this great re-acceleration, right, that leads to utterly more hawkishness, perhaps like a 50 basis point hike in March by the Fed. I think that is a bit overplayed.
So what is your equity allocation within multi-asset? Is it an international, U.S., U.K., domestic, maybe continental Europe skew? What is the factor that determines the equity allocation?
Yeah, we're still really liking, for example, Eurozone equities. We're not overweight in the US. We're not overweight in Japan. In fact, we're underweight in Japan because we do see a little bit more upside for the Japanese yen, and that should go against Japanese earnings. So it's really focused on the Eurozone, a little bit in emerging markets as well. Not so much in the US because the US has outperformed that move in rates a little bit too much. But that, having said that, I think once we get those dips in US equities, in the growth market, that I do think with almost 80 basis points of rate hikes cumulatively priced now for the next couple of Fed meetings, I do think that there is actually, at this starting point right now, perhaps a little bit more potential for dovish surprises. So both for long duration assets, in rates, but also in equities. And then it will be the time to really use those dips to scale up exposure in US equities as well.
Hey, Max, thanks for that. As always, Max Kettner there of HSBC. Speaking of dips, euro-dollar negative for a 5th straight session. 5 days of losses for the euro. That's the longest losing streak going back to late September, where we saw a peak in the US dollar, Tom.
Not the first chart I looked at today, but maybe the third chart down. I look at DXY, which is the major developing, maybe taking some EM out of it. And yeah, we've come back, but my word, we've got a long way to go to reassert strong dollar trend. I mean, the technical damage of this weak dollar is substantial. I really didn't understand that.
I was going through the dollar and I was going through the bond market, Tom. 2-year this morning, 471. Yeah. This is going to be the 5th straight week that the 2-year yield has climbed on the week. 5 straight weeks. And on the month so far, for February, that's a 50 basis point move at the front end of the yield curve. It's pretty significant stuff.
And I would suggest the spread between the bulls and the bears is how do we adapt to this grind higher in yields? Let's assume even if you get an Ed Hyman disinflation, the others talking, David Rosenberg talking disinflation, even with that, do we have to get used to this new rate environment? To me, that's the big theme for the end of March when you put out your year-ahead outlook.
I look forward to putting that out.
270-day outlook.
Looking out 9 months. Mr. Rosenberg, he thinks maybe this strong data to start the year is a bit of a head fake.
Yeah.
And turns around quickly.
Yeah.
He's not alone.
He's really looking, and he's been so good at this for decades, goods deflation.
Sebastian Page of T. Rowe Price will weigh in on some of that. He's going to join us in the next hour. Looking forward to that conversation. Up next on this program, a milestone that none of us wanted to mark. 1 year of war in Ukraine. Full coverage with Maria Tadeo and AMH. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The U.S. and other G7 nations are marking the 1-year anniversary of Russia's invasion of Ukraine by unveiling new sanctions. The measures will single out Russia's defense, energy, and metals industries, financial institutions, and more than 200 people. There will also be more pressure on third countries to choose between the U.S. and Russia.
Meanwhile, China is calling for a ceasefire between Russia and Ukraine in a proposal for ending the war, but the plan has little chance of winning broad support. Several of China's measures would offer clear benefits to Russia's President Vladimir Putin, including a call to freeze Russian troops and place on Ukrainian soil. The U.S. and South Korea are planning for a potential nuclear attack by North Korea. A so-called tabletop exercise was held in Washington, focused on hypothetical scenarios of North Korea's use of nuclear weapons. North Korea has been building up its capability to deliver an atomic strike. In the UK, household confidence rebounded by the most in almost 2 years in February. Signs have begun to emerge that the worst bout of inflation in 4 decades is starting to ease. Still, GfK's consumer confidence indicator remained close to the historic lows triggered by the cost of living crisis. And the billionaire private equity pioneer Thomas H. Lee has died. Lee ran his Boston-based firm from 1974 until 2006, when it had $12 billion to invest after producing triple-digit returns on some of its deals. His best-known transaction was the 1992 takeover of beverage maker Snapple. Thomas H. Lee was 78. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets. China open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power. This is Bloomberg. The top names at the Fed are on Bloomberg.
Inflation's normalizing, but it's coming down slowly. I just think there's going to be a lot more inertia, a lot more persistence to inflation than maybe we'd all want. I'm hearing people still out there pushing price and trying to test where the levels of inelasticity really are. As the meetings go on this year, we'll see what happens. If inflation settles, maybe we don't go quite as far. But if inflation persists, maybe we'll have to do more.
Nobody covers the Fed like Bloomberg, your global business authority. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
It's not a war, it's terrorism. It's genocide of Ukrainian population. Putin needs Ukraine, but he don't need us, Ukrainians. Putin actually try everything what he can to make a pressure to us, but we're still unbroken, and we're ready to defend our hometown, defend our country, because it's our family. We're fighting for our children, for our future.
Vitaly Klitschko there, the mayor of Kyiv, 1 year on from Putin's invasion of Ukraine. Tom, I've said it repeatedly this morning already, the milestone we all hoped we wouldn't make a year or so ago, and here we are, and not really facing any significant de-escalation whatsoever. In fact, quite the opposite, looking forward.
When I was 12 or 13 years old, I had an assignment in school, John, to look at the news the day before some big event. And I pulled out of the hat November 22nd, 1963, which for Americans is a date sealed in memory. And I went back today and looked at the New York Times 1 year after Pearl Harbor, and I looked at, believe it or not, the New York Times 1 year after the Fort Sumter battle that started the American Civil War. And this is way different. And the reason this is different, John, is the immediacy of information transfer. the images that we've all lived, the news we've lived, knowing that when President Biden sits there in Poland and speaks of atrocities, we've seen them. They're not distant as they were in December of 1942.
China at the epicenter of this, Tom.
As they were in 1942, well said.
In a major way this morning. We had a China ceasefire proposal, 12-point blueprint. And Tom, part of that included a ceasefire which would freeze Russian troops in place on Ukrainian territory, as well as a call to immediately end all sanctions not endorsed by the UN Security Council. And as we've written and everyone knows, Russia holds veto power there, Tom. So how effective was that proposal? And is it ultimately dead on arrival? And it feels like it's dead on arrival already.
Best map I've seen, John. Let's bring it up on radio. I'm going to describe the map. And John, the map brilliantly describes what you were talking about. And the basic idea here is 1 month, 11 months ago, I should say, the Russians were very successful. They were coming in from Belarus in the north, all of that eastern territory they've been fighting for years. And of course, Crimea down to the south in the Black Sea. And the map now, John, is a testament to what Ukraine and the Allies have done. I did not realize how radically different it looks 11 months on.
How close do you think we are to NATO members having a real conversation now about sending jets? How close are we to that moment?
I would ask the Finns with a 700-mile, I'm guessing, border with Russia. I would ask the Baltic states. I would ask Germany with all that baggage. And, of course, you have to ask the Prime Minister today with his moment of silence in London.
Compare that to where we were just 3 months ago, where we were really worried about red lines. We hear from the administration about sending additional missiles, and sending tanks was just like a no-go. That was a red line. And here we are having a real conversation about sending jets as well, Tom.
I think it's fascinating to see the idea of the buildup and how Mr. Putin reacts to it. And to me, and I'm going to defer, John, to others, but to me, I think it's just extraordinary how we have to lean on experts right now. John, who do we have over in Europe right now?
So we've got Maria today on the ground in Ukraine, Tom. She's in Kyiv. We've got Anne-Marie over in London. I think we should start with Maria in Kyiv. Maria, you're on the ground. Talk me through the moment.
Well, Jonathan, I want to pick up on something that Tom said. When you look at the map in the early days of the invasion, and then you look at the map now, and you see how Ukraine was able to repel and push back Russian forces. When you get on that train from Poland to Kyiv, and it's 17 hours or you're going to be on that train, you start to approach the capital of Ukraine. First, you realize just how big this country is, but also you start to get to places like Bucha, and then you go to Irpin, and finally you get to the outskirts of Kyiv. And that's when you see the real fighting that was going on when Russia tried to take on the capital of Ukraine. There's another thing that happened on that train. It's a moment where it finally makes sense to you, and you realize you're in this packed train, and it's only women that are there, and that's when it finally hits you. This is a country at war. You don't see any men because they have to stay here. They cannot leave the country for, obviously, the war, and this idea that this is not going to end anytime soon, so you need this man here ready to fight. And this morning, by the way, President Zelensky, the first thing he did was to address those troops and to say, yes, Kyiv today feels strangely safe. Nothing happened overnight. There were no sirens. Some Ukrainians will tell you when you hear nothing, that's when you need to worry. But again, that reiteration from the Ukrainian president, you have to thank your troops because they are fighting at the front. This is a mirage, this piece that you see.
I want to ask the two of you a question. I'm going to go to you first, Maria. Does Ukraine have the people to get through the next year? Do they have the manpower to staff the army? Forget about the missiles, forget about the tanks. Maria, does Ukraine have the people, the manpower?
Well, the question would be, do they have the men that are willing to go? And Tom, every person that I've asked here, every man that I've asked here, would you be willing to go? If you're not on the front line, would you be willing? And they all say yes, just for a very simple reason. Like, they believe this is an existential question for this country. They say we would not do it for the money. We would not do it because we want to look tough, just simply because we believe that we're going to win this war. And when you talk to people, forget about the official line, forget about the government officials, just people here on the ground. Do you believe you're going to win this war? They will tell you, yes, we are going to win the war.
Anne-Marie, I want to bounce off a wonderful note from Greg Villiers, summing all this up from Washington, and you're the person to talk to with your heritage of dealing with Mr. Putin over many years. Greg Villiers borrows from Bernard Bailyn, the historian, and he speaks of the depeopling of Russia. Is that Mr. Putin's worst enemy, that people are just deciding to leave?
Well, it depends who the people are, right? This is really based on socioeconomic standings of Russians in Russia. If you are from a certain social class where you have access to capital and you have a higher education, it's quite easy. And what we've seen is an absolute brain drain of these types of individuals leaving Russia. Many of these individuals, they're educated, they don't believe the Russian state TV propaganda, they obviously understand what's going on, and they have left with the families. You see this most prevalently in the likes of the United Arab Emirates, right, in Dubai. I saw it in Indonesia when I was in Bali. I was sitting at one of the hotels, and all I heard was Russian around me. You see these individuals leaving Azerbaijan, Georgia. They want to get out, but this is a vast country, multiple time zones. It stretches obviously all the way to right up to where China is. So they do have the capacity of other Russians, and I think one big question as we hit this 1-year mark is whether or not there will be another conscription. Will Putin have to have another conscription? We know we had those 300,000 a few months ago.
Anne-Marie, just to build on some of the work you've done regarding the Chinese government, they've offered a ceasefire proposal this morning. What's the response to it?
I mean, the West is just saying China doesn't have a leg to stand on if they're going to offer a ceasefire proposal. Let's go through some facts. One is that yesterday there was a United Nations proposal that was a peace proposal, but it did say that Russian troops would have to leave Ukraine. China, if they are talking about a quote-unquote peace proposal, they abstained from this yesterday. All of these things that China is talking about in this 12-point plan, they have already said. Also, Jake Sullivan, the President's National Security Advisor, said yesterday is that they could have just stopped at one, which is that they have to respect the sovereignty, the first point of all nations. What China is trying to do is globally look like a statesman, but we've talked about this. Xi Jinping has engaged with the top levels of the Russian government. President Putin and the likes. Wang Yi was just there talking about the fact that this relationship is rock solid. They are building upon what we saw this time last year of this no limits relationship. But behind the scenes, China has not engaged at this level with the Ukrainian people. And I spoke to an Ukrainian official this morning, and they said they're still analyzing this proposal. Puts them in an awkward position, right? They cannot publicly come out and say they're against this because they know China's the one that could put the weight on Putin.
Anne-Marie, thank you. Out of London, alongside Maria Tadao over in Kyiv. We'll keep this coverage going through this morning. We'll catch up with them in the next hour. I'll go back to that reporting, Tom, from Der Spiegel just yesterday evening, without citing specific sources, reporting that there are talks ongoing between Russia and one Chinese manufacturer about buying drones in the war effort.
Why not? I saw that.
Where does that leave us? That's precisely what the U.S. government is concerned about.
Yeah, exactly. And drones, I believe, we've learned in 1 year, have proven to be the new warfare. They've proven to be hugely effective, maybe like balloons over the World War I front line. What I would suggest, John, is all of this means there has to be a new engagement with the Pacific Rim for America. We saw that in the Philippines, where we see it down to the south, and critically, where we see it with Korea and Japan.
Coming up on this program, Eric Nelson of Wells Fargo. Looking forward to that conversation up next.
life, I've often said, is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like, but the more you could be you, the happier you would be.
Snapped a 4-day losing streak on the S&P 500 in yesterday's session. Messy session, though, all over the place.
Messy.
On Thursday.
Messy.
To close out the week, we're down about 5 or 0.6% on the S&P. On the Nasdaq, down 0.9%. On the S&P 500, heading towards a third straight week of losses on the S&P 500 for the first time in 2023. In the bond market, let's just go straight to the 2-year. Every single week for the last 5 weeks, the 2-year yield has been up. We're up another basis point to close out a week, just above 470, very close to the high of the week, the high of the year, and the high of this cycle, going all the way back to 2007 on a 2-year, on a closing basis. We did that a little bit earlier this week at around 472. Right now, 470.98. Yield's a bit higher on a 10-year, lower yesterday, thanks, Tom, 389.26. And I want to finish up with the euro. Euro-dollar has been negative for 5 straight sessions. That streak, unbeaten, unless you go all the way back to late September. Euro-dollar 105.82. We're down about 0.8%. That's a weaker euro in the mix here, TK. You remember late September? Yeah. That was a peak in the US dollar. Euro-dollar at the end of September was something like 95.36 at the low. We're above parity now, but certainly that weakness has crept back in the last week.
Somnolence of a Friday data check. I thought you gave it some great fake excitement. That was good. It's going to change at 8:30. Folks, stay around here. In 2 hours, you may get a real data check.
Look, TK, we've gone from 110.33 to 105 in a couple of weeks.
Dollar, yeah, absolutely.
It's a real move on euro-dollar.
And sterling under 120, I just noticed that. I mean, I know you follow it by the TikTok.
I can't believe how much mud you've just thrown at my market.
Well, it's Mud Friday, you know.
Get some Fed speak.
You know what the problem is? I'm getting all Bramo's hate mail today. I never see it. Oh, they're brutal. They tear it to shreds.
What about?
Oh, everything. The gloom.
I thought she got the love.
No, you get the love. You don't even know it.
I get the love relative to the hate that you
get. The love. I don't get any mail.
Ken deserves the love.
Nobody pays attention to me. Bramo, we're missing because she gets the hate mail.
We miss Lisa. Lisa's going to be back.
Read something here.
I'm told. I'm going to read this.
Okay.
We're going to talk about the Fed speak and the reaction to it. Eric Nelson of Wells Fargo has this to say. The biggest risk, in my view, is one in which we get a temporary reacceleration in activity and the Fed gets spooked, shifting back to tightening in 50 basis point increments again. In that scenario, volatility would likely jump across markets and the dollar gains would accelerate. That would exacerbate the looming recession. Eric Nelson of Wells Fargo, Tom.
A number of ways to look at this, and of course we can do it with Mr. Nelson through his macro strategist of foreign exchange, but it also redounds over to the bond market and indeed into equities as well. Eric, I'm going to go to the bond market right now and say, okay, with your scenario of 50 beeps, if they screw this up, we get new low prices in bonds, new higher yields. We get a 30-year mortgage that goes through 7% and breaches out back to new high mortgage rates. It's a sum of all the parts. How do you use the dollar study to bring it into all those other parts?
Well, we look back to 2022, Tom, and what you had was such a toxic confluence of tightening financial conditions. So you had a very strong dollar, higher volatility, the Fed was raising rates in 75 basis point increments. That's a very challenging environment for the real economy. We talked to a lot of corporate risk managers when they don't know if the Fed's going to go 50 or 75 and you know, could get to a 5 or 6% terminal rate. That's a very challenging environment in which to make decisions. So that's exactly what the economy, the market wants to avoid. And so it's not just the dollar itself and its impact, but it's sort of that confluence of financial conditions that matters.
Off plot, John's going to get us back on the rails, but I'm going to go off plot. What in God's name does a 6% terminal rate do to EM?
It's not pretty, Tom. I think you certainly have, like I talked about, some resilience in the global growth data at this point, which can keep EM supported. The question, though, is if the Fed gets to 6%, and we look around the world at, you know, the yen, the Swiss franc, the euro, all of those central banks are raising rates and could raise rates further. There's really not a clear funding currency out there for EM investors. And if you actually do see the global growth data start to deteriorate with rates so high, that could really change the capital flow picture for for EM, which has so far been quite positive in 2023.
What funding currency used to be the Japanese yen? Eric, we heard from the incoming BOJ governor in the last day. He said, if I'm appointed BOJ governor, my mission isn't to come up with some kind of magical special monetary policy. As I've mentioned before, if you look at the trend in prices, there are improvements we're seeing, but the situation remains that it'll still take some time until we've securely achieved 2% inflation. Now, Eric, can you imagine someone at the ECB or the Federal Reserve using the same language the BOJ chief is using right now?
It's hard to wrap your head around, John. Certainly when you look at the spot inflation picture and where wages have been trending, I think the challenge here is that we came into the year, and certainly we were in this camp as well. There's a lot of bullishness around the yen. And now I think investors are starting to take a look around and say, all right, we've got global yields rising. The BOJ is probably not going to normalize policy further in the very near term. And all of a sudden, that picture for the yen looks much different. And actually, if you look at the flow data, Japanese investors are back to buying foreign bonds again. So it's a very challenging near-term environment for the yen. And in the very near term, if the yen is clearly the most obvious funding currency. So it may come under some short-term pressure here over the next few weeks.
But Eric, you've nailed it. Look at the competing forces here. We're talking about QT at the ECB, QT at the Federal Reserve, and then you've got Japan sticking with yield curve control. We were thinking that maybe they back away and the inverse happens. The Japanese money comes home and moves away from European markets, away from US markets. That's not happening. Eric, how does that complicate the ECB's effort and the Federal Reserve's effort?
Yeah, it's so much of it. It comes down to on the flow side, right? I mean, in some ways, it makes the Fed's, the ECB's job a little bit easier in the sense that if Japanese investors are in fact, buying bonds, and we don't have this feared exodus, the risk of that, real meltdown in treasuries or OATs or bunds, that becomes lesser, and that's certainly good news for the Fed and frankly for the government in terms of funding risk. But certainly, I think you have to watch these flows so carefully in terms of where is that yen going to go over the next 6 months. I think at some point the patience, and we're already seeing the patience of the yen bulls is really starting to wear thin.
What is the global economics? And folks, I think this is something that's less known under Jay Bryston over the years. The international economics of Wells Fargo has really been quite good. And with that said, Eric, what does Japanese growth look like? I mean, do they get weaker growth, lesser inflation? Do they go back to zero growth? Dare I say they get a nominal GDP that begins to near 0%? What's the scenario you see, the outcome?
Well, if you look at what the Bank of Japan is projecting for the output gap, they're effectively saying that the output gap is closed at this point. So the question is, can they get a little bit more marginal juice out of, another couple months or another couple quarters of some of the nominal price growth? And does that wage picture really start to take hold? Jeremy Rudd at the Fed has done some great work on the psychology of inflation. And once people start talking about inflation, that actually can change the paradigm a little bit. So I wonder if the same dynamics take hold in Japan. That's really a key question here. So that's why the BOJ is watching those spring wage negotiations so closely in terms of the nominal GDP outlook.
This is a huge unspoken, John, the research that Mr. Nelson speaks of. Olivier Blanchard has worked off of VCU research on this as well, which is the emotion and behavior that people have, society has, over a new inflation regime. Japan, with inflation, is a whole brand new experience for millions of people. This is unspoken.
Tom, you've talked about this a few times. I have as well. The leadership at the BOJ really sees this as a once-in-a-lifetime opportunity to reset inflation expectations higher.
Kuroda economics.
Not just Kuroda, everyone else as well. And that's why it's going to be very difficult to move away from this. Eric, I just want to get to the epicenter of your piece on the Federal Reserve and the US economy. I get the sense from you, Eric, that you think the data we've seen so far, the strong, resilient economic data, might be a head fake that tempts the Fed into doing something stupid. Is that the view?
If you look at the past 7 or 8 recessions or so in the U.S., it's very common to see an acceleration in things like real incomes or even payroll sometimes, because these are coincident or even lagging indicators. And if you actually look at the leading indicators out there, certainly the housing market, manufacturing sector, I've certainly seen plenty of reasons to think that there's maybe some quirks this time around because of COVID, why we shouldn't pay too much attention to these leading signals. But to me, there is a very strong signal coming from those leading indicators. That's too hard to ignore, and I do worry indeed about too much focus on these lagging and coincident indicators, especially CPI. That to me is a really dangerous thing to focus on in guiding short-term monetary policy.
Love the input here, Eric, as always. Eric Nelson there of Wells Fargo on the central banks and what's happening in the US economy. I just got sent a great piece. The Spectator yesterday. You're going to love this poll.
That's British Reg.
Fantastic. Well, sort of, conservative thinking magazine.
The stories are all too long.
Well, I'll keep it short. I'll get to a paragraph.
Okay, please.
Given a set of 4 options, 40% of the public, British public, would put the Foreign Secretary up at a basic hotel for a conference overseas for 2 nights, though thankfully with their own room. Just 14% would select the kind of 5-star accommodation which Rishi Sunak stayed in at the G20 summit in Venice. Wait for this. 30% would stretch that to a 4-star hotel, with 7%, this 7% line's amazing, would rather they share a room in a basic hotel.
Well, that's what you and I do.
There's some pushback against how much politicians are spending, Tom. Government officials are spending when they go on tour.
Yes, but I would also push back and say it's outrageous what it costs to travel now, whether you're a government official or not. I mean, you literally burst out laughing at what it costs. I mean, it's just absurd.
Well, the flights, yeah.
The hotels.
Well, they're flying first class.
Helene Becker-Cowan says the hotels are worse than the flights if you can get a room.
Well, Golub of Credit Suisse said yesterday to me, Tom, consumer discretionary this year, place to be in the equity market. Seen massive performance year to date. He thinks it can continue. Just because that's what people want to spend money on. That's where the competition is.
I continue to say, and I will be proven wrong at some point, that corporations adapt, and they will adapt to this. And, maybe it'll be tough sledding, but that's what you do in a real rate regime. Money costs something.
Adapt and adjust, Tom.
Thank you.
That's your line. Just,
Can we save some time today to talk to Man U? I've never seen so much optimism.
You want to talk about Manchester United?
About Manchester United.
After that result yesterday.
Lord O'Neill emailed me like 11.
What did he say?
He said, Tom, it's like,
result.
It's like Ferguson Redux.
Beat Barcelona.
Yeah.
Playing in the wrong competition, though, if it's Ferguson Redux. You want to be in the Champions League.
They're playing EFL on Sunday, I think, against Newcastle. How many
League final.
How many things do they play?
A few.
Don't I just want to worry about Premier League and forget about the rest?
That's a good start, and then we'll build on that. I mean, you're throwing some Formula One into the mix as well.
Well, it's separate. But
I've chosen a
Man
team
U's
for you.
playing a game this weekend against Newcastle. That's not
team for you. I'll unveil that in a moment, okay? Futures lower, -0.6%. This is Bloomberg.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. It's been 1 year since Russia invaded Ukraine. The U.S. and other G7 nations will mark the occasion by imposing more sanctions on Russia. The defense, energy, and metals industry will be targeted, along with financial institutions and more than 200 people. And there's likely to be a crackdown on those who help Russia evade sanctions. Poland will begin sending German-built Leopard 2 tanks to Ukraine today. The Polish government has promised to deliver 14 of them. Earlier this week, Spain said it may increase the number of tanks it's sending to Ukraine from 6 to 10. China is set to overhaul its financial system, giving President Xi Jinping more control. A powerful committee to coordinate policy is likely to be revived, and one of Xi's key allies may be appointed to a top position in China's central bank. Well, it's another setback for Boeing's marquee wide-body jet program. The company has paused deliveries of the 787 Dreamliner over a documentation issue with a fuselage component. Now, Boeing says the problem does not pose any safety concerns for 787s already in service. The jet has been plagued by production issues in recent years. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He called himself self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg.
The more weapons, more sanctions for Russia, more support for Ukraine, something that we have been saying all this year, the faster we can get all the capabilities, the faster we will be able to get to just peace.
That was Oksana Makarova there, the Ukraine ambassador to the United States. Live from New York City this morning. Good morning to you all. Equity futures look like this on the S&P 500, negative by 0.6% on my screen. There we are. We're down about 0.6% on the S&P. In the bond market, yields are a little bit higher on a 10-year to 390, reclaiming 390. Came really close to 4% earlier this week, up 2 basis points. Euro dollar with a 105 handle, bit of dollar strength through the week. Euro dollar negative, weaker every single day through the week so far. Outside of that, looking ahead, data, 8:30 Eastern time. We'll get to the PCE and all that good stuff a little bit later in the program, and then a ton of Fed speak as well, Tom. Mester, Bullard, Waller, take your pick. The Hawks are out.
And they're going to look at the economic data as well. And again, as we go into next week and begin to stagger into March, again, a late jobs report in March before that inflation report. We're making jokes about it, adapt and adjust. I mean, that's what we're going to do. And right now, it's murkier. I want some clarity at 8:30. We don't have it right now.
I'm with you, Tom. Let's use your phrase, adapt and adjust. Wow, have we adapted and adjusted to the situation in Russia with regards to the energy security issues, Tom? We're looking at the price now of crude in the 70s, the 80s. Where were we last March? For a second, triple digits plus, 120, pushing 130. It's a turnaround.
Highlight of our week, not single highlight, but one of them was Edward Morris of Citigroup, who has a geopolitics like no one, and I've never heard him more ambiguous. John, ever. I've never heard Ed Morris that, not confused, just uncertain of the outcomes.
Just going through the projections, Tom, CPFC on the Bloomberg, if you have access.
I don't have that.
To go through the commodity price forecast. Tom, median, the median on WTI year end, about 74. About 74. That's the forecast on Brent.
Yeah.
Close to 80. So
We're
not
there.
big moves. I know that Jeff Curry and Goldman are still looking for triple-digit crude, but that's certainly not the consensus view. Looking out 9 months.
My amateur take is go back to China and look for the China reopening, and we heard some optimism there this week as well. On Ukraine, and this is a really important conversation, in my youth, there was a gentleman from Arkansas named Senator Fulbright. Senator Fulbright had a real understanding of the continent of Europe, having lived World War II like many. And within that, he and Oxford did all sorts of things in academics, including the Fulbright Foundation. Alina Polyakova survived the Fulbright Foundation, is now with the Center for European Policy Analysis and professor at Johns Hopkins. Alina, I want to go to William Fulbright here and really fold it into your wonderful note, which is we're not doing a Fulbright war. Fulbright said, if you're going to do it, and if you're not, don't do it. You say this is the forever war. Are the Allies migrating towards Kyiv, or are we still at a distance?
Well, thanks, Tom, and you're absolutely right. I was just at the Munich Security Conference, which of course is the largest gathering on defense and security for the Transatlantic Alliance, and I took away a couple of things on your point. One, I heard incredible bipartisan support from the U.S. Congress. We had the largest U.S. congressional delegation to Munich ever, which is significant. And with one voice, you don't hear Republicans and Democrats speaking in one voice on too many things, but on this, they were clear. We need a win. We want Ukraine to win. Unfortunately, that's not what we hear with one voice from all of our European allies. And I think that's the real problem here. So we're in this situation where we've given Ukraine a drip, 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 drip of weapons and financial assistance, but it's not enough for them to truly win and take back their sovereign territory.
Well, Alina, this is really important. I mean, I'm not going to go back to Vietnam, and Fulbright is an early critic of our Vietnam War experience. But in the more recent age, we have the forever wars of Iraq and certainly the forever war for Russia and the U.S. of Afghanistan. Are we not used to anymore actually fighting and doing war?
Well, the truth is this doesn't have to be another one of those so-called forever wars. It shouldn't be. The Ukrainians have been fighting incredibly courageously. They have, really gone far and beyond anyone's expectations. We were used to think a year ago that this was going to be a 3-day war and Kyiv was going to fall. But Kyiv stands, as President Biden recently said. So there's no reason for this to be another embroiled, multi-year war. The war can end this year. It's really just about whether we want to help Ukrainians enough to get it done. They can get it done. Are we going to be there to help them?
Alina, this is a difficult question to answer, but what do you suppose beating a nuclear power actually looks like?
Of course, this has been...
We lost the connection there. I think we've lost the connection there.
That's Bramah with the mute button.
Alina Polyakova there, of the Centre for European Policy Analysis. Got a few minutes left before the break, so if we re-establish that connection, we'll bring it back and hopefully you can answer that question. That's not straightforward, Tom. That is not straightforward.
No, I thought your question is brilliant and goes to the laureate Thomas Schelling here, and that the nuclear ability changes the debate completely.
It's not Iraq. It's not the Taliban in Afghanistan.
Yeah.
It's a nuclear power.
Yeah. I believe we have Professor Polyakova back. Is that right, team? We've got it. John, why don't you weigh in with Alina?
Alina, thanks for being with us. I'll give you the opportunity to answer that again if you can. I don't suppose a lot of people have given this much thought when they talk about winning and beating Russia. What do you think beating a nuclear power actually looks like?
Well, the truth is that I actually think it's increasingly unlikely, and this is going to sound probably a little strange to folks, but I think it's increasingly unlikely that Russia will use a nuclear weapon in Ukraine. We have heard the Chinese be very critical of that. We've heard that India has been sending signals to Moscow, to the Kremlin, that they do not want a nuclear confrontation. And Russia has to listen to those countries because it's increasingly dependent on those countries for its oil and gas exports, which of course Europe has now almost completely stopped. So I think the likelihood of that is relatively low. What that means is that we're fighting a conventional war. You know, we thought we're all going to be fighting some 21st century war with everything being automated in the cyberspace. No, this war looks a lot like the last World War II that we fought in Europe. And that's a brutal war fought by tanks and all kinds of machinery like that we've seen before. So I think the nuclear problem is a serious one we need to consider, and we need to be thinking, how do we reduce nuclear risk? But I do think we have done a good job on that. So now the objective is clear. It's how do we win the conventional land war, and how do we help Ukraine do it?
Well, Alina, I assume you think that the Europeans, NATO members, should be sending the Ukrainians jets. Do you not think there would be a response from Russia and escalation in the face of that?
Well, you know, we've seen this movie before, you know, when Ukrainians were asking for Patriot missiles, which are these air defense missiles, so they can defend against the constant bombardment from, you know, Russian bombs, from drones, all of that that's hitting Ukrainian civilians and their energy infrastructure. We said, no, Patriot systems are on escalation. The Russians will escalate, is going to provoke them. And then we sent the systems a few months later. You know, nothing really happened in terms of Russian strategy. The Russians have been doing what they've set out to do, which is first to take Kiev. They failed at that. Now they're trying to take over Ukraine's east, the Donbass. We need to start thinking less about what might the Russians do and thinking about what we want to do in Ukraine. And I think the jets will probably have the same reaction. We'll send them just like we did with the tanks, and it really won't change much on the Russian side.
Elena, do you understand that for a lot of people outside of Ukraine, they understand the pain of the Ukrainian people, but if there is a risk, whatever probability you assign to that risk, so long as it's not zero, that could lead to some kind of nuclear escalation, that's not a risk that people are willing to take. How do you get the support from Western governments and their electorates to continue with this push?
Well, the interesting thing has been that there has been overwhelming support from Western governments and from the public. You know, just taking example in Germany. Germany has been very reluctant over the last year to provide weapon systems. They recently did provide German Leopard tanks. But what we've seen over and over again is that public opinion in Germany, probably the most pacifist-oriented population we have in Europe because of obvious historical traumas in Germany, they have actually been ahead. The German people have been ahead of the German government in wanting to support Ukraine. Why? Because people understand that if Ukraine falls, there is no limit on what the Russians might do. You know, then you have NATO on the potential path of aggression. That's not outside the question. We do not have a NATO confrontation with Russia now. That's exactly what we're trying to avoid by giving Ukraine what it needs to win. We're trying to keep this out of the NATO territory, because if Russia wins in Ukraine, it will feel emboldened to go into NATO, and then that is going to be the real conflict that we're all worried about.
Elena, we have to leave it there. Thanks for being with us, and our apologies for the technical problems a little bit earlier in the conversation. Elena Polikova there, Tom, of the Centre for European Policy Analysis.
April 18th, she added immense value on the Black Sea. We're not talking about the Black Sea.
We will in the next hour. Equity futures down 0.6%. This is Bloomberg.
Lots happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.
We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
So most actors are thrilled if they have one part like Rocky in their whole career. Yeah. You had another one, Rambo.
Yeah.
Now, Rambo was not something you created, is that right?
No. Rambo was a novel by David Morrell. And I was the 11th choice. Everyone, it was like, I don't know who was next after me because they had gone through everyone. And it passed, including 3 different directors. So this had become sort of a pariah of sorts. The first time we go in there, Rambo was in the original screenplay was horrible. He was a psychopath. He killed children. He killed fishermen, this and that. So I said, if I'm going to get involved with this, I see the character going on beyond this. And they said, what do you want to do? I said, I want to rewrite the screenplay. And I want him to go right to the edge of violence, right to the point where he's being pushed, but he pulls back because, similar to James Dean in East of Eden, he wanted to be accepted back into the family of man.
So if Rambo got in a fight with Rocky, who would win?
Rambo.
Rambo.
Easy.
Because
not even a fight. Unless it's in a ring. See, first of all, Rambo is a killer, for real. He's almost a psychopath when that switch flips. Rocky is a good guy. You know, he has mercy. The other one has no mercy.
The top names in business are on Bloomberg.
I think the future of autonomy is real for civil. It's going to take time. Everyone's got to build confidence. We need a certification process that we all have faith and believe in. As you may know, we have an application on an all-electric autonomous airplane we refer to as WISC. There's so much to learn, so much to do, but it is being done.
Nobody covers business like Bloomberg.